About 10 basis points at 470. I have to admit, to be honest with you, I was super surprised to see the scale of the move in the Treasury market as soon as Treasuries opened up. Stuart, I don't know about you. Were you surprised by that, just to see yields down as much as they were?
Yeah, a little bit, just because we didn't see the move in oil didn't kind of, get teeth into it yesterday. So maybe you thought the response in bonds today would also be a little muted. But to your point, it's Fed speak plus a bit of a risk-off environment probably combining to do that. But yeah, a little bit surprised at the size of it. I've been surprised by the size of bond moves a lot recently, though.
It's surprised that it moved the other way.
Exactly.
So yeah, I know. I think intraday moves on Treasuries, Lisa, getting increasingly difficult, aren't they? We're down about 10 basis points now.
It's just there is a conviction. We were talking with Ed Al-Husseini of Columbia Threadneedle about these big picture frameworks. Too early to tell. Are we going to be dealing with bigger deficits and suddenly bond vigilantes? Too early to tell. Are we going to be dealing with investors pulling back from Japan? Too early to tell. All of these massive linchpins that used to give people confidence. Without that, you're going to have things whipsawing like penny stocks, and that's basically what we've seen in the Treasury market.
Basically all year, that's been a story in the Treasury market. I'm not sure anyone's got a clue beyond Q4. I think it was Mr. Hartnett over at Bank of America who said that. What aren't we asking about? Next year. Not talking about next year at all. The broader story looks like this right now then. Equities picking up yesterday, doing okay in the face of some real geopolitical tension over in the Middle East. Equities positive by 0.1%. Yields are lower by 10 basis points, 469.86 on a 10-year. And crude running hard yesterday, selling off a bit today, down 0.5%, $85.90. Coming up, AMH in Washington, D.C. in the next 10 minutes or so. Next hour, the Israeli ambassador to the United Kingdom. That conversation just around the corner. Live from New York City, this is Bloomberg. Good morning. This is Bloomberg Surveillance on TV and radio.
Welcome to Bloomberg Markets. China open.
Good morning, everyone, and welcome to the Pulse.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg.
This is Daybreak Europe. I'm Kriti Gupta. Let's get to the stories that set your agenda.
Taking you from the U.S. market's close.
A lot of this was priced into the U.S. session.
To the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
Slice through the noise.
Forget the noise, ignore the noise.
Is this just going to be noise?
Just noise.
It's noise versus signal.
Now, more to the point.
What is the lesson or the observation?
Have you seen personally, or are you aware of, any evidence that Iran was directly responsible and helped coordinate these attacks over the weekend?
Well, let me tell you what we do know for sure. But we know for sure that Iran provides the last numbers I saw, 93% of the military budget of Hamas is provided for by Iran. Did they know about this beforehand? Initially, we didn't think that they did. Now there is some evidence that they might have known about it. We are working to verify that evidence.
The conclusion to that question is so important about where this war goes, where it stops, and the potential for a real regional battle. Tom, that was Ron Dermer, the Israeli Minister of Strategic Affairs. More on that story in just a moment. Just to get you up to speed on what's happening in the equity market. Positive by 0.1% on the S&P. A lift in stocks over the last 3 sessions. Yields dropping this morning by 10 basis points. Call it 11 if you want to round it down. We're down to 469.45 on a 10-year. It's a big move, but it fades just a touch. It was an even bigger move overnight off the back of the tensions that we're seeing in the Middle East. On top of that, you've also got the dovish remarks we've heard from Jefferson, from Logan, from Daly last week with Lisa. Yields lower, dollar weaker, euro stronger. Just short of 106, Tom. That move fades as well. 105.85 on the euro against the dollar.
Some other stability there. Oil, $88 a barrel. West Texas Intermediate, $86 a barrel. Our Bloomberg Washington correspondent, Amory Horton, will listen at 1 p.m. this afternoon. Amory, what do you suggest that President Biden will say?
Well, he'll come out as commander-in-chief as well as consoler-in-chief. So first, I think the president will offer the unwavering support from the United States to Israel and say that the U.S. continues to stand with Israel. Potentially, he will talk about a tranche of aid. You know, there is already appropriations that have been set aside that could go to Israel. So potentially, he'll talk about more security efforts and more aid that will go to Israel. And then, of course, he's going to talk about what we know now as the death toll stands for American citizens that were killed in this massacre over the weekend, 11. President Biden put out a statement yesterday. And in that statement, he also talked about the fact that there is likely Americans that are being held hostage right now by Hamas. The FBI also put out a statement talking about the fact that they are working with individuals on the ground. It is of utmost importance and urgency that they figure out where these Americans are and how they get them back.
Emery, as we go through the day, there is discussion also of literally a war-footing cabinet or government in Israel as well. What is the outcome we'd like to see of a unified Israel, the domestic politics of Israel?
Well, I think we just heard from our bureau chief in Israel that this is a possibility, and historically, this is what Israel has done. Right now, the government is Benjamin Netanyahu teaming up with some far-right parties. We did hear from former leader Yair Lapid yesterday and over the weekend talking about the fact that he would be for a unity government. I think what you see right now happening in Israel is there's a lot of questions about how this happened. Where were the security and intelligence failures, especially in a border like Gaza with Israel? Seemingly, there's supposed to be informants within there, and how did this just happen? And a lot of people are saying, we will answer those questions at some point, but right now we need to rally around the flag, and there is potential for that.
We will hear from the president at 1 p.m. Axios reported yesterday, Anne-Marie, that Israeli Prime Minister Netanyahu told President Biden that Israel does not have any choice but to unleash a ground invasion in Gaza. Has that story developed at all in the last 24 hours?
Well, Jonathan, even if we don't know for sure that Israel is planning to do that publicly, Israel right now is calling up 300,000 reservists. So the next obvious move would be this potential ground invasion into Gaza. This is something that everyone is pretty much anticipating. Of course, the issue Israel has is that if they are really focused on their border with Gaza, and the concern is, and the risk is how this conflict could spread, is that they're focused so much in the south. What happens to the north if potentially Hezbollah gets involved? And there was some few moments yesterday in the north with missiles and Hezbollah.
And that's part of the reason why some people are saying the U.S. sent that ship to the region to prevent that kind of conflagration. What's your sense of what the appetite is in Washington, D.C. to pass additional money to send to Israel in addition to what is being sent to Ukraine, not as a substitute or something that takes away?
Well, we have reporting that over the weekend, lawmakers have floated to the White House this idea of linking the two. And by doing this, you'd have a lot of, for the most part, bipartisan support with more aid and appropriate more money for support for Israel. At the same time, if you link them with Ukraine, this could potentially deal with some of those concerns and fractures and divisions within the Republican Party about how much money they want to send to Ukraine. We heard from Senator Chris Murphy this morning on MSNBC. He said that they're already dealing with a new appropriations bill to go to Israel. You will see this bipartisan support, but potentially to also get the aid to Ukraine done, they could link it. We should also note, though, we still do not have a Speaker of the House. So potentially how quickly the House can move to appoint a Speaker, that's how quickly we can see any of these packages develop.
Well, that's exactly where I wanted to go, that basically it's one thing to talk about theoretical aid. It's another thing to actually deliver it when we don't have a functioning House of Representatives. At what point does this accelerate the plan to get some sort of Speaker in place? Is this the reason why Kevin McCarthy said, I guess I'll come back and be your Speaker again if you need me to? Is this going to accelerate things, or is that basically a pipe dream, and are we still heading toward a November 17th shutdown?
I think two things. I think first, there's definitely a lot of pressure now on lawmakers to really get their act together within the Republican conference to try to coalesce around someone. But the issue remains that whether it's Chair of the Judiciary, Jim Jordan, or number two from McCarthy, Steve Scalise, none of them can get to 217 at this moment. There was a meeting last night, a House Republican caucus, airing of a lot of grievances. And then, of course, what we saw yesterday, and this was going to be my second point, is that there was really this gap of leadership on the Republican House side. And former Speaker Kevin McCarthy took that moment and gave a press conference. He talked about Iran. He talked about there needs to be tougher sanctions on Iranian crude that's leaving Iran. Most of that is going to China, and how they're building up a lot of cash and capital because of this. He talked about the need to have an ironclad support for Israel. He talked about a lot of his trips to Israel. And then he did say and insinuated, and then he did say this in a Republican talk radio interview, that he would do what the conference wants. At this moment, potentially it is the former speaker who can get the majority of the conference, but will he get 217? He had 8 people that said no to him. It is very unlikely, but we can't rule it out.
Anne-Marie, next hour we'll catch up with John Kirby, the National Security Council spokesman. What would you like to hear from us regarding him?
Well, John Kirby recently gave an interview where he choked up on air. So I think really getting a sense of him, of the images and the intel they are seeing, would be important. But also, what I think is interesting right now, and I think this is something that the U.S. is trying to grapple with, is at one point you had about a week and a half ago, Jake Sullivan, President Biden's national security advisor, talk about the fact that the Middle East is the quietest it's ever been in decades. At the same time, over the weekend, Secretary of State Antony Blinken went out and he said that they have seen some, instability between the Palestinians and the Israelis, and that's been a concern for months. How do they weigh these two things?
Really important stuff. Anne-Marie, thank you. Down in Washington, D.C., our chief Washington correspondent, ahead of that conversation with the National Security Council spokesperson, John Kirby. This is what he told the press yesterday on Iran. Clearly, Iran is complicit here, but in terms of specific evidence on this, on these set of attacks, no, we don't have anything. Tom, it just keeps coming back to that same question regarding Iran.
It'll come out. And again, the 90% statistic that we heard from the former ambassador to the United States rings loud, to say the least, what we heard from Stephen Cook earlier. What I would suggest, John, is there's a lot of chit-chat about diplomacy, foreign affairs, the politics of this. It's a war, and the war will be front and center, just like it was in the early days of Ukraine. What's going to happen in the next 6 hours in Gaza has to be the focus.
On some of the internal dysfunction here in the United States, we'll catch up with Congressman French Hill, Republican from Arkansas, in about 20 minutes, so look out for that interview as well. Just to get you set up for the market day, your equity market rolling over just a touch, still positive on the S&P 500 by 0.1%, call it 0.06 if you want to be super precise. Yields are lower by about 9 basis points. That bid into the bond market does start to fade as this session grows older. We're down 9 basis points at 470.70, and the dollar weakness you saw off the back of that bond market rally starts to fade a touch as well. The euro is still positive, but only just. That currency pair, the euro against the dollar, up by 0.1%, 105.80. Big move in crude yesterday. Crude rallying hard. Little move lower today by 0.4%, $86 on WTI. Live from New York, Jane Foley of Rabobank up next.
Obviously, we were trying to create shoes for me to wear in the Olympics, and that was happening pretty quickly. And then just understanding a new industry and how shoes are even made. But as we went down that path and started to just learn and research more, we learned that shoes have not been made for women. What that means is a shoe is made off of a last, which is a mold of the foot, and it's the mold of a man's foot used to make women's sneakers. And I think it took time for us to really grasp that, because, you know, we've been in shoe stores and we've gone to the women's section and it's like, no, there are shoes for women. Like, what's this over here? And then to really understand, like, all of that is marketing. This is just a man's shoe, like in a different color. And so that kind of eye-opening experience was just like, okay, we got to do this. And even more than making the shoes, like, there's a deeper purpose here. Like, women deserve better and we shouldn't be an afterthought.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. On's running shoes have a unique look, and so does its leadership team. CFO Martin Hoffman is also co-CEO, and he thinks two jobs are better than one.
How do you balance those two roles?
I feel the CFO makes you a better CEO, and the CEO makes you a better CFO.
Watch Chief Future Officer this Wednesday on Bloomberg.
Equities just about holding on here on the S&P 500, just about unchanged. 2 days of gains, Friday, Monday, looking to add to it this morning. We're positive by 0.03%, but that move fades. We're negative on the Nasdaq Dow, down by about 0.02%, and essentially flat as well on a Russell of small caps. You want a mover? Check out Pepsi this morning. Out with earnings, $2.25 per share for the third quarter. Above analyst estimates at 216. Tom, that stock is up by 0.8%. I know you're super focused on it this morning.
It's just another example of a dynamic American company looking at a global basis and generating out 8, 9, 10% sales visibility, revenue visibility. The lights are brighter with a high nominal GDP. The lights are brighter with inflation, and it just makes it easier to do business.
The earnings pick up on Friday with JP Morgan results just around a corner. Let's talk about the bond market, the rally that Bramo is responsible for. The conversation started with the San Francisco Fed President Mary Daly at the back end of last week, open to the idea that this shift higher in yields may take away the need to do more at the Federal Reserve. She's got company, Lisa, yields to lower 10 basis points.
Although I'm not sure that that's such a dovish message, other than simply yields being where they are will tighten financial conditions more. If yields don't stay where they are, if they drop, does that change the view? And suddenly you have to go further. This is a game theory type of moment with a chicken and egg, the Fed and the bond market playing this sort of, you know, loop-de-loop.
What's a loop-de-loop?
I don't know. This just sort of feels like a big loop going back and forth between each other to try to basically come to the same resolution that higher yields are needed in the face of inflation.
I said this to Stuart Kaiser, didn't we, in the last 30 minutes or so over at Citi, that ultimately surprised by the scale of the move this morning. Yes, it missed out on the haven flows yesterday. Yes, we heard from the Fed Vice Chair Jefferson, who spoke to the same kind of thing that Daly was talking to, Logan as well. But to wake up to something like 15 basis points lower on a 10-year, to see that 2-year sat to 5% all over again. I was surprised this morning to see the scale of the move.
It screams of a lack of conviction. It screams of a real inability to really understand which dynamic is driving things. That is my only takeaway from how quickly things are moving in the bond market these days.
As yields drop, the euro pops, the dollar's a little weaker. The euro against the dollar looks like this. We are negative over the last few months. We're positive on the session by 0.1%. 105.79, briefly 106. So everything we started the session with is fading. Stocks were up a lot. They're now just up a little bit. In the bond market, monster rally. We've given some of that up. In the FX market, a lot of dollar weakness. We give some of that up as well. 105.78, that currency pair positive by 0.1%. Under surveillance this morning, the conflict between Israel and Hamas in its 4th day, with the death toll rising past 1,500. Israel now reclaiming full control over towns near the Gaza border, once infiltrated by Hamas. The military mobilizing at least 300,000 reservists ahead of a possible assault, although a ground invasion has not yet been confirmed. President Biden saying 11 Americans have died in the conflict, with more likely, Tom, being held hostage.
I should point out a couple models, and I'm focused much more on the war than I am on all the other chit-chat. And John, not only a ground invasion, but also from the water as well. from both sides of the Gaza Strip, from the Mediterranean as well, is one of the operative theories that's out there.
It was shocking over the weekend, Lisa, for so many reasons. Land, sea, and by air as well.
And there's discussion about the way that it happened was just removing technology completely and having just, face-to-face, non-advanced communications to avoid the surveillance of Israel and others. The question that everyone's been asking, and you've been right to keep harping on this, is Iran and their involvement. At what point do we have a sense of a broadening web of blame, of a broadening web of a conflict, and how much is the reluctance to lean into that message by the U.S. authorities and Israeli authorities, the reluctance to really expand in direct hits to Tehran at a time where there was trying to be some sort of peace. There were discussions, negotiations with the U.S. government, and it is just a volatile situation.
For good reason, we've taken our eye off other stories. Just to bring you an update on what's happening elsewhere. General Motors workers in Canada walking off the job as contract talks failed. The union representing auto workers in Canada unsuccessful in getting GM to match a 3-year deal it signed with Ford, which included wage increases, cost of living allowances, and pension improvements. The strike raising pressure on the automaker, which has also been dealing with strikes in the United States. So, Lisa, pressure from both sides of the border on GM.
And we've seen that consistently. Ford did come to some agreement, as you were mentioning, with the Canadian workers. This isn't going away. I mean, the fact that we're still not talking that much because we've been distracted about what's going on. The strikes are still ongoing in Detroit. We have strikes that have widened potentially through other fields as well. This is the dynamic that makes the likes of Andrew Hollenhorst think that this inflation is going to be stickier and longer lasting.
It's going to stick around into next year, potentially. That's a question for Treasury Secretary Janet Yellen. She's going to speak at 10:15 a.m. Eastern Time over in Morocco. Tom Keen's going to be later on this week. We'll also hear from Fed officials Bostic, Waller, Kashkari and Daly. This after Fed Vice Chair Philip Jefferson weighed in on rising yields, saying the following: in a position to proceed carefully, aware of the tightening of financial conditions through higher bond yields, and will keep that in mind as I assess the future path, Tom, of policy.
This goes back to, and I sound like a broken record, but I'm going to give Dominic Kostom a lot of credit here at Mizuho. This is about this idea of, are you restrictive, or because of outside market events, is the Fed super restrictive by indirect restriction by the way the markets move, or frankly, the way global GDP moves? And clearly the tone you're hearing from them is a nudge towards a further restriction or greater restriction.
Lisa and I were talking about Andrew Hollenhorst over at Citi, who published on this, surprised by this dovish turn from several Fed officials, said this: the attempt to control longer-term Treasury yields through rhetorical intervention is unlikely to be successful in the long term. Tom, we've got lots of data this week, PPI, CPI, minutes as well in the mix as well, going into the Fed next month.
The mix of CPI overwhelms all, not only the headline numbers, but the many, many partitions of inflation. And frankly, I would go back to what rents are doing nationwide. In selected cities, John, rents are really rolled over into a deflationary tone, if not outright decline. That's not true of all cities, including, I would suggest, fair New York.
Just to repeat, developments in the bond market were down 7 basis points at the front end on a 2-year. On a 10-year, we're down about 10 basis points. Let's call it 470 now on a 10-year in America, Tom. On a 30-year, it's had a look twice now at life above 5%. It's come back down by 9 basis points this morning. TK to about 488.
A quick briefing right now with Jane Foley. We last saw her on her visit to London. We're thrilled she could join again today. Head of foreign exchange strategy at Rabobank. When the facts change, Jane Foley changes. How do you change when there is war?
Well, you know, we've seen the market really trying to grapple with that question today. I mean, yesterday we had the perhaps predictable market reactions, you know, moving to gold, for instance. We had oil up, but there were no signs of panic. And for instance, you know, oil yesterday up, 3-4%, that sort of figure, not panicking. And I think the lack of panic meant many investors thought, oh, you know, well, we're not going to really react strongly in one direction. So let's bring it back the other way. And that's why we saw the signs of recovery today. But, you know, as you keep pointing out, you know, those moves are fading, and investors are lacking conviction one way or another. And I think perhaps key to this will be whether or not this conflict does expand. And we've seen, you know, the US bring in that or move that aircraft carrier ships, etc., into the vicinity of Israel, trying to calm the tensions in the Middle East. Whether or not that's successful or not, I think it will guide market direction.
Okay, so when we have war and we try to be rational, what do we do? Just, do I understand, migrate to the dollar? Is that in our quietude, Do we just migrate to USD?
Well, I think first of all, we've got to understand, there's a difference here between, the sheer horror of some of the events that we've heard about over the weekend on the human scale, the sheer terror and panic and despair related to that, and the markets, and the markets, of course, have no heart. It's very cold-hearted. The market tries to look at issues such as, will oil supply be limited as a function of this? How does that tie into what Fed policy is going to do? Does this mean that the Fed perhaps will not hike interest rates in at the end of the year? And so the market, takes out the human factor and the horror and looks at this in a much plainer, cold-hearted light. And right now, the market's thinking, oh yeah, maybe these awful events, but maybe it means that the Fed won't have to hike so much. We've had, a couple of commentary yesterday from Fed officials indicating that maybe that they're not going to be quite so hawkish, and the market's reacting to that sort of news. So what we're seeing in the markets perhaps by no way, reflects perhaps some of the pain as humans that we're seeing as a consequence of these remarks.
Jane, you framed
these events.
Jane, you framed it so well, and it really speaks to how difficult it is to be talking about markets and parsing through them at a time of such suffering and human tragedy. There is a question, though, about how much what we're seeing in the market is a direct response to also what happened in China overnight, the fact that there is the potential for more stimulus. And again, the focus as humans on the imagery in markets, how much has shifted to China?
Well, I mean, China, I think the events in China have been there all year, at least for most of the year. There's been huge disappointment about the lack of growth in China. Now, the hopes for more stimulus, we've seen these for months. But what we've also seen is that there isn't necessarily the stimulus that we might expect in the West or perhaps in Japan, where we get the stimulus that stimulates consumer demand. We haven't really seen that sort of stimulus. And that's why perhaps we've been disappointed as market watchers again and again about the type of stimulus that we've seen. We've seen stimulus perhaps to buy properties to try and stabilize that sort of sector, but not to put money into consumers' pockets so that they go out and they spend in a very sort of US Western type of recovery. So that perhaps remains to be seen. Are we going to be disappointed once again by this lack of stimulus that we're used to in China?
Jane, just real quick here, as we look to how the events in the Middle East progress, how much is the euro vulnerable if oil prices do materially rise on a sustained basis, if the conflict does expand?
I think the euro has to be vulnerable on that sort of news. I mean, we saw, last year how vulnerable the euro was because of then Europe's leaning on Russia for energy. And Europe is, of course, still a very significant energy importer. The energy transition is going to be years away, and therefore that makes the euro vulnerable. And we've got to look at this upon the set of factors that we have, the risk that Germany might be facing recession, the risk that the Eurozone could face recession in the second half of this year. So on top of an already weak economy, this is something that's really not needed.
Jane Foley of Rabobank, the latest on the FX market. Just hearing from National Security Council spokesperson John Kirby speaking to reporters this morning, saying the unfrozen Iranian money hasn't been spent. This is the $6 billion. Lisa, that's becoming increasingly controversial.
Especially because some people speculated maybe it was going to fund the invasion, the attack. Basically, a lot of people have said it hasn't been released. There's been some discussion about how it's in-kind types of aid to Iran that is not exactly direct money. Either way, very much a focus on the fact that the U.S. softened positions against Iran ahead of what we just saw.
This is what Secretary Blinken said to ABC over the weekend. Not a single dollar from that account has actually been spent to date. It's very carefully and closely regulated by the Treasury Department to make sure that it's only used for food, for medicine, and, Tom, for medical equipment.
Well, that's going to be the limitations as well. And again, the diplomacy, John, I can't emphasize how so much of the analysis I see is, to me, almost premature analysis from the actual prosecution of war. I don't think 300,000 conscripts being called up care about those niceties.
If you are just joining us, welcome to the programme. On the S&P 500, positive here by 0.1%. Coming up at about 8:45 a.m. Eastern Time, we will catch up with John Kirby, the spokesman for the National Security Council. Javier Blas, our Bloomberg opinion columnist, writing on Twitter, on X. Lots of chatter about the $6 billion to Iran. Javier says it's a distraction. The real money is on rising Iranian oil output as sanctions aren't enforced. Javier went on to say, at current prices, Iran is making $1.5 billion per month extra versus if its production was capped at October 2022 levels.
This is a huge political football in America. It'll be interesting to see how this is, again, away from the war, to see how this is structured by the two parties.
And it's directly competing with this feeling that this administration and others would like to see oil prices in the U.S. go down. So if you deal with that, how do you then remove these barrels from the market? It's a tenuous moment. We heard yesterday from Ellen Wald. She doesn't think they are going to be more significantly enforced regardless.
Brent crude right now just south of $87 and about 60 cents. We're negative here by 0.6%. Coming up next, Congressman French Hill, Republican from Arkansas, on the dysfunction at home and the potential escalation abroad. From New York, this is Bloomberg.
The younger generations are more, of course, pay more attention to sustainability. And so they are looking at brands that are greener, but you have to make sure you're authentic because they hate greenwashing. But what is very important to remember is that none of them, whether they're young or not, will ever sacrifice product quality and efficacy to sustainability, which is why part of the big transformation of our R&I, where there's this €1 billion we spend every year, most of it is spent on transforming our formulas from petrochemicals to biosourced ingredients and green sciences, but without losing the efficacy.
The top names in business are on Bloomberg.
The market is starting to look over the Fed's moves into falling interest rates.
We actually think that core inflation is going to fall a little faster than the Fed expects, and that will allow them to start cutting rates by March of next year.
You get a price spiral when labor markets are tight. In manufacturing, labor markets are still very tight right now in the US.
Nobody covers business like Bloomberg. Context changes everything. Markets count down in Europe from the financial centers of the world. Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg. Top experts. Great questions.
This is about a moment in time. This is about what America's going to do. I'll allow the conference to make whatever decision. Whether I'm speaker or not, I'm a member of this body. I know what history has had, and I can lead in any position it is.
That was Congressman Kevin McCarthy, who at one point looked like he might resign from the House, Tom, and now he might become the Speaker again. Things are changing quickly in Washington, D.C. Your broader price action looks like this in the equity market. Positive by 0.1% on the S&P, a rally in bonds, a mix of everything, not just the haven flows of the last couple of days, which we missed out yesterday because the Treasury market was closed, but also off the back of this dovish Fed speak we've heard from several Fed officials. We're down 10 basis points, Tom. Your 10-year 469.86.
It's interesting now, and we're going to get right to this because there's so much to talk about. He is a congressman from Arkansas and Little Rock. He's been a wonderful voice for Bloomberg surveillance over the years. And John, to have French Hill with us is important. I think there's so many stereotypes of Judaism in America, and the diaspora off the Civil War was extraordinary, and it goes back to Little Rock, Arkansas in 1866, and the congregation B'nai Israel. And it is a foundational Jewish congregation in the South in America, and that's part of French Hill.
Congressman French Hill joins us right now. Congressman, a deeply emotional time for everyone involved, even those looking on from the outside looking in. Congressman, have you had an intelligence report, a briefing just yet?
Jonathan, we have a Intelligence Committee meeting on Israel this afternoon at 3 p.m. so that we can pose all these questions that so many of us have, which is, how did this happen and we weren't aware of it in advance? I think that's a key question that everybody's trying to get the right answer to.
There is something very odd about what we're being told currently from the administration. It was only a week or so ago that we heard from Jake Sullivan, the National Security Advisor, who is optimistic about developments in the Middle East and said the Middle East region is quieter today than it has been in 2 decades. At the same time, we've heard from Secretary Blinken, who said we've been concerned about the risks of instability for many, many months between Israelis and Palestinians. Congressman, which one was it?
I think it's, I've traveled in the region since the 1st of May. I've been in Amman twice, Jerusalem, Riyadh, Erbil, Baghdad, Ankara, Turkey, talking about the region, talking about the need for America's reassurance of the region that we're not pulling out and that we're a true partner. But there's some key issues. First, the Arab League has readmitted Assad back into the Arab League, even though he's done nothing to curtail his murder of his own citizens, his partnership with the Iranian Shia militia and the Russians in killing Syrians, and exporting Captagon, which is a deadly and addictive drug that he's manufacturing and selling to the Gulf states. And look, I was pleased that the president has begun to make progress with Saudi Arabia on potentially bringing them into the Abraham Accords initiated by President Trump. And for some of us, this looks like a direct response to that effort, that Iran is throwing a disruption by a full-scale attack, if we find it to be true that they backed Hamas. But they've been a financer of Hamas, they've been a founder of Hamas and Hezbollah in Lebanon. So all fingers are pointed in that direction, but we want to get the validation.
Congressman Hill, part of this is a stretch of 5 years, 10 years, 15 years, dare I say back to 1973, which is an America balancing between realpolitik and a focus, and some would say, critics would say, over-focus on human rights. Frame how that debate's going to go as you go to this security meeting this afternoon and, frankly, in the coming days of war.
Right. So, look, if you want peace in Israel, you've got to have a partner to negotiate with. And that's a really important thing, I think, for Americans to understand. There is no one Palestinian authority with, that fully represents the citizens that live in Gaza and those in the West Bank. Hamas is essentially at political war with Fatah, which is Mahmoud Abbas's party in the West Bank. So it's very difficult to get a two-state solution when you don't really have two states that you're trying to negotiate with. That's why the Abraham Accords approach, the involvement of Saudi Arabia, I thought could be a breakthrough in trying to bring peace to the West Bank. But that doesn't really affect the fact that Hamas, which controls Gaza, doesn't agree with their other Palestinian brothers and sisters in the West Bank, and they're certainly fully committed to war with Israel.
Well, okay, the war with Israel, what do you expect to see at this meeting today? I mean, you've been in these meetings a zillion times as well. You're going to be briefed. Then what?
Well, I think we're going to find out first, what's the intelligence say about the partnership that helped Hamas carry out was a surprise attack on Israel. So that's, I think, the first thing and the first and most important thing. Secondly, what is the response of Israel to that attack on their sovereign land, and what can the United States do to stand with our ironclad ally and partner in the region to repel it? And then, of course, we've got the issue, Tom, that's very concerning to all of us, which are Americans that are held as hostages or Americans that have been killed. And that will be a very important decision for the president, and I look forward to his assessment on what the American reaction should be to that.
Congressman, can the U.S. unleash aid to Israel without a House Speaker, without a functioning House?
Yeah, thanks, Lisa. Look, last 2 weeks ago, we passed the State and Foreign Operations appropriation across the House floor, and we passed the Defense Appropriation Bill across the House floor. Billions of dollars in those bills for our military partnership with Iran and to counter terrorism like Hamas, and money in state and foreign ops to enhance the Abraham Accords issue. And we don't support in these bills aid to the Palestinian Authority either until they rein in this kind of behavior. So those bills were important. I wish the Senate would take those up. But we need a House Speaker this week, and we need it soon because we want our full legislative body to have the voice of the American people. In case President Biden asks the House to take action this week, we have to have a House Speaker.
Congressman, are your peers, your colleagues in the House, in the Republican Party, willing to tie the idea of Ukraine aid and Israel aid together, or is there reluctance to really go for one and not the other, or simply to deal with this issue right now, given how politically fraught it is?
Yeah. Well, first, I think we should treat them separately personally. I'm working very hard in the House to find the consensus on the right path forward to support kicking Putin out of Ukraine and providing American support to our European allies to continue aid to Ukraine. We want transparency. We want leadership. We want a strategy to win, of course. But America is an indispensable partner in NATO and in that effort. Secondly, on Israel, we need to hear directly from the president after this, he completes his assessment on what we need to do to support our ally Israel that we can't do with existing authorities or existing funding. I think that remains to be seen, and we'll hear from them soon. In the meantime, as I say, we've appropriated $3.3 billion for foreign military sales assistance to Israel just 2 weeks ago, and we appropriated $500 million for the U.S.-Israeli military cooperation agreement. So there's significant money that's been approved by the House.
Congressman, speaking of money, this unfrozen $6 billion is getting a ton of attention. Let's work through it together. This is the official response from Secretary Blinken. This is what he says about it. Not a single dollar from that account has actually been spent to date. It's very carefully and closely regulated by the Treasury Department to make sure that it's only used for food, for medicine, for medical equipment. Are we focusing on the right thing here, Congressman?
Well, look, let's be clear. Let's say that Iran this year will have its largest GDP source, about $45 billion in oil sales. We're talking about releasing fungible money back to the government of Iran, which is a state sponsor of terrorism, about $6 billion related to money from oil sales to South Korea. What Secretary Blinken says is true, that it can only be released when they make a humanitarian or food assistance purchase, but it's still money that goes into the Treasury in Tehran, and they can use other money to fund terrorism because they know that $6 billion is coming in. And on top of that, Iraq owes Iran $31 billion, and the United States has approved a release of about $2 or almost $3 billion of natural gas sales money from Iraq to Iran. So this is significant money when you think about their largest GDP revenue source is about $45 billion, and we're talking roughly $17 billion in total that they're eligible to receive through these trust accounts, as you say, for a humanitarian or foodstuff type purchase. But we're not naive here. That frees up other money in the Tehran treasury.
French, thanks for catching up with us today. I know the intelligence briefing is a little bit later on this afternoon. We'd love to catch up with you again afterwards to get an idea of what you've heard from the government. Congressman French Hill there on the latest. That is the Republican perspective, Tom, on that $6 billion that has been unfrozen.
I'm sure the president will address that at 1 p.m. this afternoon. John, not an original idea, but it's just hit me over the numbness of the last 4 days. This isn't 67 or 73. We have social media, and the social media out of Iran and the social media of hostages and war and death and blood is in your face. It is different.
It's absolutely shocking.
Yeah.
Absolutely shocking to see how it's played out. From New York City this morning, good morning to you all. Equities just turning a touch negative. This is Bloomberg.
A lot of the focus on the breakthroughs were because a lot of these research labs, the OpenAIs, Anthropics of the world, DeepMinds, had this focus on AGI, artificial general intelligence. Can you build an AI that can do anything?
Yes.
And it turns out maybe you can. So
making a machine that's in our own image, in a sense, that's what AGI sounds like.
More than that, it's a general intelligence. So it's the kid that made you look bad at school because he was good at everything. You know, the top performer.
Right.
Like GPT-4 now can pass the bar exam, the medical licensing exam, the GRE. It's probably going to Stanford, you know, next fall. But then our take was, that's great. You can have these amazing giant general models. What will be better is to mimic humanity, where our companies are not one generalist doing everything. What if we made it so you could bring your own data to the models and have lots of specialists working together and have those models working for you that you own?
Right.
These models like really talented graduates that occasionally went a bit weird. It's called hallucinations or other things, but that's because we feed them bad data. So we were like, what if you had open data, open models, and allowed it to be customized and specialized. So again, like a talented graduate, and they can learn very quickly from a few examples. So they have this base of generalized knowledge. They've been through kindergarten, high school, and university, but they're not specialized yet. But you can train them yourself, or you can just show them some examples, and they learn very quickly.
From the world of politics to the world of business, every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg. Context changes everything.
That's me, Max. What's up? How are you? I have been writing about Wall Street for almost 15 years. And what that means is I write about feuds and rage and rises and falls and comebacks. And every now and then, I also write about a couple of villains. Thank you so much. And now, I am about to do something new and very, very scary. We are making a show, and it's based on Bloomberg Businessweek magazine. So what is this show about? It's a show about money, power, culture, pop business. We're gonna ask complicated and profound people about their ideas, their careers, their lives, their risks, their failures, their imagination.
It's so incredibly liberating not to care what other people think.
I was giving my tools to other communities. I wanted to bring those tools home.
Tune in. Please, really actually tune in. I desperately need an audience.
Next week on AI IRL.
I do think it has a tremendously positive effect on democratizing technology. I mean, just imagine what it must feel like if you are a country in Latin America, Sub-Saharan Africa, or in other parts of the world where you just don't have either the money, because you need a considerable amount of money, or the very significant GPU computing capacity, or the data to build any of all of these things.
There's deep concern that there was intelligence failure in Israel and on our side as well.
If it continues to escalate, I mean, the big issue is you may actually see an increase in rates.
Can we expect the treasuries to behave as that safe haven status?
I think when there's trouble in the world, the safest asset is the United States Treasury.
Options markets are notoriously bad at pricing geopolitical risk.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene on radio and television. A week of inflation reports, maybe off the radar on a Thursday, as the news flow is extraordinary. Charles Cantor scheduled to be with us on a resurgent equity markets, his thoughts on the markets. But John, we continue with our coverage of a war in Israel. The Israeli ambassador to the United Kingdom to be with us in this hour.
We know the position of Prime Minister Benjamin Netanyahu. His latest quote, they will respond very severely and aggressively. Based on the numbers, we're talking about more than 300,000 army reservists, Tom, called up. And the latest news this morning, on Gaza Strip, on the border, Tom, they're now building a base to accommodate thousands of soldiers, which might give you an idea of the next steps. The question we've been asking is whether we would see a full ground invasion. Based on the preparation we're seeing over the last 24 hours, Tom, it would indicate that's quite possible.
I wonder if it'll shift the markets as it becomes a greater war, the narrow strip of land from Egypt on up into Israel, and not only a ground invasion, but maybe an invasion from water suggested as well. I'm not stating that as a fact. It's a movable feast here. Maybe the markets readjust as we go through the day.
Well, the market reaction that catches your eye this morning is this monster rally that you're seeing in the bond market for treasuries, and there's two reasons for it. Yes, the risk haven story, the haven flows we didn't get yesterday because we were closed. We get them today. We're down 10 basis points on a 10-year. But also, I want to go back to Lisa's conversation with the San Francisco Fed President, Mary Daly, the first Fed official really to come out of the gate and suggest that the moves we've seen in the bond market maybe take away some of the need to do more at the Federal Reserve, just to allow the bond market to do the work for them. Heard it from Daly, heard it from Jeffries. Also, Heard it from Logan as well.
And maybe the mix, Lisa, of the real economy and also this critical inflation report. I mean, it was a relief to talk to Lindsay Piegza in the last 90 minutes about something as prosaic as what's going to happen Thursday.
I would agree with that somehow that feels prosaic and almost comforting to think about those things rather than what is transpiring right now in the Middle East. The question that I have is, you can't really separate that now as an overhang, especially if you do get some sort of pop in the price of oil, if you do get further repercussions in Iran. And as a result, how do people factor in an unknowable into their assessments? And it really speaks to the volatility that we've seen and will continue to see in the bond yields and the bond space, regardless of what we get on some of these more traditional prosaic measures.
And John, $88 a barrel on Brent crude, and I guess the backdrop here and removed is where I'm going, which is IMF World Bank. And Secretary Yellen is there with a broad agenda, but you wonder, when does she come back to Washington to face a war with this president speaking at 1 p.m.?
You mentioned crude, 88 right now. I think in the immediate term, the only thing that matters to oil, at the moment at least, with regards to the Middle East, is whether Iran is directly implicated. Now, listen to the language we hear from the administration currently. This is from John Kirby, the spokesperson for the National Security Council. You'll hear from him on this network in about 40 minutes' time. Clearly, Iran is complicit here, but in terms of specific evidence on this, on these sets of attacks, no, we don't have anything. Updates there will be critical for where that conversation goes.
In our conversation with the ambassador of Israel to the United States yesterday, noted, and that story went worldwide. We're going to do a worldwide data check right now. We mentioned oil, $88 a barrel. 10-year yield was in 13 basis points. It's a relief. It's a pullback, John, only in 10
It's faded. The move in the equity market has as well, Tom. We were higher, and now we're basically unchanged. The euro is showing some strength. The dollar showing some real weakness. 105.78 on that currency pair, positive by 0.1%. Lots to look ahead to in this market. Lots of economic data, PPI tomorrow. We'll get FOMC meeting minutes as well on Wednesday afternoon. And then CPI, the big one, on Thursday, going into bank earnings on Friday, Tom. JP Morgan, just around the corner.
We're going to pick up our coverage of the war here in a bit. And right now, because of his schedule, we're thrilled to lead this hour with Charles Cantor, Senior Portfolio Manager, Neuberger Berman. He knows, he's seen wars like this before. I'm just going to begin with the idea, Charles, that you look at a war like this, you study it, you are aware of it, but it's removed from portfolio analysis.
I think by and large, it's removed from portfolio analysis. We have so many colleagues that are part of this conversation. They have loved ones in Israel that are candidly getting called up to the reserves, and so emotionally we got to calm folks down and just show tremendous empathy for just the horror of the terror attacks that took place over the weekend and the implications for that over time. But ultimately, it's earnings week, and we long-term investors, and so for us, it'll come back to the details and the fundamentals around our underlying companies.
Well, let's go to some of those companies. JP Morgan reporting on Friday. A lot of banks reporting next week as well. Banks have really struggled this year. If you were going to tell me, Charles, maybe the year before, the data's going to be good, the expansion will continue, yields are going to be higher, that's all good stuff for banks, isn't it?
It is, but don't forget they're regulated, and they are being required to hold more and more capital, and that's a challenge. And because they're required to hold more and more capital, and others aren't, there is a disintermediation taking place in the loan market. You know, away from the folks like JP Morgan and towards some of the private loan markets and players in that are required to hold less capital. That's part of the story. And when you see rates move at this speed and in this quantity, you always worry that something may fall off the bus, and that's not to suggest anything. Well, I think these companies generally are incredibly well run, but there's always a risk associated with that. As you saw earlier this year with Silicon Valley Bank and First Republic, you saw how quickly the narrative can change.
It was the common belief that banks set the tone for the earnings season, that JP Morgan kicked it off and set the tone. Has that basically been eradicated because of how closely they're regulated and how specific their business set is?
I think to a large degree it comes back to the makeup of the market, and it depends on which market we're talking about. If we're talking about the S&P, I think over 30% of the market is driven by 7 or 8 companies, and so by and large those are the companies that more than likely set the tone. I think many of those companies are remarkable They have invested hundreds of billions of dollars over the last 5 years in R&D to drive future innovation and growth. And they're going to be resilient in the backdrop that we find ourselves. They have believable growth. And then you've got to think through, the valuation equation against those seven. Some are more cyclical than others. Some sell very expensive cars and have a lot of exposure in China. Others, I just think, have tremendous cash flow and just supreme balance sheets, which you don't have in a financial institution. Financial institutions, by definition, are highly levered entities.
It sounds like you like big tech, right? I mean, that seems like what you're leaning into right now.
Look, we're in an environment where we're all debating what next year looks like. And I think you want to own businesses that you feel highly confident can grow earnings almost regardless of the environment. I'd say we like tech because of the innovation it's brought to the broader ecosystem over the last 50 years. And on a more one-year basis, I think so much of what is safe is interesting to us, and that it would include companies in the utility sectors, companies in consumer staples, more traditional businesses that are candidly down a lot for a variety of reasons, and I think will deliver surprisingly good earnings growth against valuations that are really attractive. There's just so much bifurcation underneath the market as it relates to valuations. It's just not a market of seven stocks. And when you go away from those seven, I think you find lots of really, really interesting things.
I'm fascinated by the return of a real yield. Many, many people don't understand I'll say 2006, 2007. I'm going to assume along my great theme that there's a great zombie roll-up, that we clear markets in a Hayekian way, and we end up with a strong. How do you identify the strong?
Look, you identify the strong, I think, through one, pricing power. So I think many of the businesses we've spoken about today enjoy pricing power. Even on the consumer staple side, whether it's Keurig, Dr. Pepper, or others, they enjoy pricing power because of the oligopoly nature
That's okay,
of the market.
you're on this side of the table. If you're sitting over there, you can pronounce it.
It's
you're
so
on
hard.
the wrong side if you're sitting near me.
We spent a commercial break with Lisa basically teaching Tom how to pronounce words.
It's hard. But I think it comes down to pricing power. It comes down to how they're deploying artificial intelligence to drive revenue opportunity and productivity over time. And candidly, it comes down to balance sheets. And we're in an environment where we all know the cost of financing has changed a lot. And the stronger the balance sheet, I think, the more comfort you have in getting to kind of the next cycle. We're all debating when this cycle ends and the next one begins. I don't want to debate that. I want to debate owning cash flow that has pricing power, artificial intelligence, and strong balance sheets.
Do you remember coming out of the financial crisis, we used to talk about this D word, disruption. And every time I heard that word, Bramo, it would drive me nuts. Yeah. Disruption, tech disruption. It was like in every single headline. Can we talk about something truly disruptive? When you started to hear about Ozempic and the pickup of Ozempic, did you start to go through the portfolio and say, things are going to change here. I need to get rid of some of that, do something here?
I mean, the Ozempic conversation, we debate on lots of levels, both personal and professional.
Give me an idea of what that sounds like professionally.
Professionally, I think it goes to how believable are the demand trends underneath the company. I mean, I thought the head of Walmart North America last week suggested that the behavior they see in some of their more staple-oriented snacking, cola businesses are starting to show things that maybe are a little bit, unexpected. At the end of the day, you got to think a little longer term. It's a very nuanced conversation. It's around are consumers going to get access to the drug if they want it at an affordable price? Will their healthcare service providers give them access to it? And then it's do they really change their longer term behavior? And it's a demographic conversation potentially as well. So I think it's candidly too early to tell. I'm sure Pepsi right now is talking about it on their conference call. I don't have the benefit of listening in to that, but it's something we debate. But when you come back to the staple companies, right, you got to probabilistically weight in the markets that operate, what's at risk. And I think when you look at many of these companies, a lot's already been priced in as relates to, what's at risk.
particularly for some of the pharma companies responsible for the drugs.
Well, the pharma companies have enjoyed this, you know, do you want to own Eli Lilly up 50%, or do you want to own Coca-Cola, Pepsi, or Dr. Keurig down 20% on the year against valuations? And so, look, we discuss this a lot. Stocks are stories. Bonds are really contractual arrangements. So in the storytelling business, you can understand why some of the pharma companies are up 50% and why some of the staple companies are down significantly this year. Ultimately, it's going to come back to the facts. And if you start to notice meaningful shifts in how people consume cola and snacks and Hostess Twinkies and other things like that, then we'll adjust as well. But it's against the valuation framework as well. I mean, the interesting thing about Keurig Dr. Pepper is you have a coffee business and you have a cold drinks business. So you got kind of got hot and cold at the same time. And there's just a lot of value in that one in particular.
Love that description. Charles Cantor there. If you're just tuning in, your equity market totally unchanged. We're positive here by 0.05%. The reason I asked that question is an important one. I think a lot of people have become very wealthy, getting rich off the obesity epidemic in America, investing in some of the companies that you've just detailed. And on the other side, having a healthcare business that deals with it. And I think you can guess some of the investors I'm talking about. They've become very rich off this. And I'm trying to work out whether this is truly the game changer, that disruptive thing that turns it all around.
I mean, look, I'm not a doctor, but it would seem that if you follow the data in some of these drugs, it would imply that there are meaningful long-term benefits. But the healthcare conversation in the U.S. is a very nuanced, complicated, and political one, and ultimately, it's hard to figure out.
Charles Cantor of Neuberger Berman.
covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West. Only on Bloomberg Television, your global business authority.
Have you seen personally, or are you aware of, any evidence that Iran was directly responsible and helped coordinate these attacks over the weekend?
Well, let me tell you what we do know for sure. But we know for sure that Iran provides the last numbers I saw, 93% of the military budget of Hamas is provided for by Iran. Did they know about this beforehand? Initially, we didn't think that they did. Now there is some evidence that they might have known about it. We are working to verify that evidence.
That was Ron Dermer, the Israeli Minister of Strategic Affairs. Live from New York City as we count you down to the opening bell, about 1 hour and 13 minutes away. Your equity market rally this morning fades. The stock market totally unchanged on the S&P 500. The rally sticks in the bond market. Yields lower by about 10 basis points, but even that fades a touch. Similar move in the FX market. Saw lots of euro strength, dollar weakness through G10. Want to 1.580 on the euro against the dollar. That currency pair firmer by 0.1%. Big rally yesterday on crude, the biggest one-day move we've seen higher going back to spring. $86 and about 20 cents on WTI this morning. Tom, pulling back by 0.2%.
Well, the markets are there after the close yesterday, and like you say, pulling back is maybe the operative phrase, but I would say we're hugely data dependent, and in all the news, and to go to Anne-Marie here in a moment, and then the ambassador, the basic idea here, John, is just simple. We've got to get to Thursday in CPI, and that can be as changeable as that stunning jobs report.
The PPI and the Fed meetings as well. Based on what we've heard from Fed officials so far, I wonder how dated those Fed minutes are, Tom, given the move we've seen in the bond market over the last couple of weeks.
Come on, you're busting my chops.
Well, give me a view.
My view is the minutes are wildly dated. They are massively, they're always data dependent. Now they're massively data dependent, and they're going to shift as they go. And you know, what's great is I saw literally articles overnight that alluded back to Lisa's conversation with Mary Daly the other day. Excuse me, I bumped the mic here, and
then decided to play squash with it.
I think what's important here is they're shifting their tone, John. They're massively shifting.
A week is a long time in the bond market, and apparently a session is as well, based on the move we're seeing this morning.
Emery Horton joins us now, as she has many times here, but it is a movable feast. Emery Horton, I look at the president's speech at 1 p.m., and I guess he's going to address the politics of your Washington. I guess he will address Iran, as they say. But mostly, I see shocking speed in war news. What do you presume will be the president's tone if we get a continued, more advanced war?
I don't see the president at this moment trying to lift from his tone of this steadfast, unwavering, ironclad support for Israel to defend itself. The president has made that very clear. There was a tweet that Secretary Blinken, the State Department, had put out after his call with Turkey, that he talked about a ceasefire that was deleted. This administration is trying to stay on message. You've seen that with Kirby hitting up all the networks. He's going to be on Bloomberg this hour, I know, and they will talk about this support that they want to give to Israel. I think the president also is going to address those American lives lost. Kirby already this morning was talking about the fact that that number could potentially rise. And then, of course, it's these Americans that we're just unsure of. The president put out a statement yesterday that's saying likely Americans have been taken hostage by Hamas.
Okay, well, they've been taken hostage by Hamas. We're going to get news flow on that. Do we have any presumption of joint Israeli-U.S. military forces?
Well, when it comes to the hostages, the FBI has put out a statement that this is of their urgent and utmost important right now, that they're focused on this and that they are working with individuals on the ground to find out what those individuals are. I mean, the U.S. sends a lot of aid, support, military supplies to Israel. But if you're, and of course, we have the warships moving into the Eastern Mediterranean, which we heard from Chairman of the Joint Chiefs today, talking about the fact that that's a deterrent really aimed at one individual in particular, Tehran and the Ayatollah. But you're not going to see American forces on the ground, if that's your question.
Anne-Marie, let's try and put a couple of things together. We've talked about the hostages. Still a lot unknown about how many and where they're from. And the president, to some extent, has got to try and address that later on this afternoon. At the same time, let's put it together with this report from Axios, reporting that Israeli Prime Minister Netanyahu told President Biden that Israel does not have any choice but to unleash a ground invasion in Gaza. How are they going to do that if we haven't dealt with the former yet?
Well, it's incredibly challenging, especially given the landscape of Gaza. Very, very dense area, the Gaza Strip. You have these blocks of buildings, and there is a network of tunnels underneath Gaza. And likely what they would be doing is putting hostages in different places around the city to make it very difficult for the IDF to go and find them. And obviously, it's going to be of utmost importance for the President of the United States and also any other nationals and their leaders of nationals that are stuck in Gaza right now. This is what is making it so complicated for Netanyahu to go in for full ground-scale invasion. But Jonathan, he's calling up 300,000 Israeli reservists. So obviously it looks like they are going all in on Gaza. But there's going to be a lot of pressure on the Israeli government, not just from the United States, but capitals around the world. Norm Raoul talked about the fact that he thinks there potentially is a Thai national there, a Chinese national there. There's going to be a lot of pressure. Potentially, and I have some reporting on this from yesterday, potentially there could be another way to get the hostages out. And this is through maybe a network like the Qatari government, putting and exerting a lot of pressure on Hamas to release those hostages. Potentially you can see this because a country like Qatar backs and offers political offices and asylum to Hamas.
The president may have to spend some time addressing the $6 billion, which is increasingly becoming a big distraction in this conversation. We've heard John Kirby need to address this several times now. I'll share with you what Blinken has said about this $6 billion, because this, I believe, is the official view of this administration, that not a single dollar from that account has actually been spent today. It's very carefully and closely regulated by the Treasury Department to make sure that it's only used for food, for medicine, for medical equipment. Do you think it's inevitable now, Anne-Marie, based on the conversations you're having, that ultimately that money will just be refrozen?
Well, this money right now, nothing has been used. And to Secretary Blinken's point, it is sitting in Qatari banks. I've actually have a ton of reporting this entire year that led up to this moment of the unfreezing of those funds. We should go back to the beginning of where these funds came from. These funds were from Iranian exports under waivers under the Trump administration. A number of countries were given waivers. South Korea, China, Japan, Greece. They wanted to make sure they can keep the oil price down, and they had these waivers. When you deal with South Korea also wanted to get rid of these funds. At one point, Iran had seized a South Korean vessel, and they wanted to get these funds out of their country. At this moment, no funds have been used. But I would look more to Javier Blas's point, which is the fact that at this moment, Iran is exporting about the same level of crude almost, or the highest it's been since sanctions were put in place 5 years ago. You know, the Iranian oil minister come out and say they want to get to 3.5, nearly million barrels a day. Well, their peak was 3.8 million barrels a day. And all of this money is coming from China. A lot of this crude is going to China. Halima Cross says what you have right now is basically, when is this de minimis sanctions effort? The sanctions are in place, but the Americans are not really enforcing them. When does this at some point become sanctions relief? What you have right now is, yes, sanctions on Iranian crude, but are they being enforced to their full capacity? Categorically, no. The U.S. has turned a blind eye.
Just quickly, are we going to have a chance to ask questions later on this afternoon of the president?
Unsure, Jonathan. When he gave his speech on Saturday, the president walked out and didn't answer any questions. Not sure if there'll be a Q&A, but reporters, including myself, will be in the room and we will shout them.
MH, thank you. Anne-Marie, our chief Washington correspondent on the latest in D.C. and beyond. That address later. Lisa, all the questions lined up. Can they answer any of them?
Unclear. So far, the proxies for the administration have not really been answering them. They're just not going to lay out what their plan is or the intelligence that they're receiving yet.
Almost impossible, Tom, to answer some of those questions at the moment.
With the new media, the speed of me, I've been watching 9 different media sources here this morning, including, of course, Ethan Bronner and all that we're doing in Tel Aviv. But the speed of news flow, the speed of imagery, and we all want to have narratives and conversations. That's different than war, which is what this is about, just like it was in 67 and 73.
Lots more still to come. We'll catch up with John Kirby later this hour, the National Security Council spokesman. Look out for that in the next hour on Bloomberg TV. Mike Contopoulos of Richard Bernstein Advisors, Jim Bianco of Bianco Research, Emily Rowland of JH Investments, and Terry Haynes of Pangea Policy. From New York, this is Bloomberg.
sports and money. They've always gone together.
But never before have sports been so massively influential and as lucrative as they are today.
NFL, NBA, none of them were what they are today when they were born.
There's leagues that are being thought of and built every day.
New teams, new leagues, new business models, even entirely new sports.
I never in a million years would have thought this is what my life would be like.
We set out to find what's happening and what's about to happen at the nexus of business, sports, and culture.
Getting involved from a business perspective was something that was very natural and an easy transition for me.
From the pickleball courts of Arizona,
to the kabaddi tournaments in India,
to the cornhole boards at your local tailgate. This is what's next in sports.
The boundaries of the entertainment world are blurry, and they're all scrambling for the same thing, screen time. And navigating this multiverse is no simple task. At Bloomberg Screen Time, it's culture, business, converged. Bloomberg Screen Time, Naya Studios, Los Angeles, October 11th and 12th. Get your tickets at BloombergLive.com/screentime.
Bloomberg Surveillance, Lisa Bramowitz, John Farrow, and Tom King. Mr. Farrow off preparing for a 9 o'clock hour. Lisa and I here with markets more quiescent than they were 3 hours ago. Quiescent, Lisa, waiting for the president's comments near 1 p.m. At least that is what is scheduled. And moments ago, we hear sirens in Tel Aviv.
Waiting for what? And I think that that's important when you say markets are kind of preparing for something that maybe they get at 1 p.m. from the president, maybe they get on Wednesday with the PPI, maybe on Thursday with CPI. The war that you reference has changed the narrative with this extra overlay of unknown that is sort of adding to the complication that already was baked into markets, with this feeling that we don't even know the paradigm that we're operating in.
And we have these headlines. We'll keep you up to date on this. What we're going to do is we're waiting for the ambassador of Israel to the United Kingdom and her busy schedule right now. And scheduled around that is Carl Riccadonna. He's see, I'll sit next to Charles Cantor, so now I can't talk. 3, 2, 1. Carl Riccadonna joins from BNP Paribas. We'll keep it easy this morning. Carl, I love the way you parse CPI, and you've got a very cautious tone on the certitude, the mix, the toxic brew of disinflation. Are we in a mode of disinflation?
I think we're in a mode of disinflation for the goods sector, for sure, for parts of the service sector like shelter costs, but it's yet to be determined for the core piece of the inflation basket, which, again, the Fed and the Fed chair has acknowledged pretty regularly that core services ex rents has been a stubborn category. Those are the things like education and childcare, where labor really dominates the input cost, and we just haven't seen enough relief in wage pressures just yet that we can really feel confident of a disinflation trend.
The question I haven't asked in ages, Carl, is inflation anchored right now? Is the Fed and all the chit-chat, including, what is it, Lisa, 18 speakers today, are we disanchored? Are we unanchored?
I think we're mostly anchored at the moment, and we'll get some data from the New York Fed a little bit later this morning. But when we look at the inflation expectations series, whether it's University of Michigan, the New York Fed series, or some other survey-based data, we're not fully back to where we need to be to say mission accomplished. We're on a track to 2% on a sustainable basis, but the wind certainly is at policymakers' backs when we look at 1, 3, 5 to 10 year inflation expectations. That'll be very sensitive to things like oil prices. So in the current geopolitical environment, we have to be very sensitive as to what's happening with oil and gasoline prices. But for the time being, I think the Fed can take some confidence that this trend is friendly to their ambitions.
Let's build on that, Carl. Are you saying that the Fed and other central banks have to respond to tamping down inflation more aggressively if oil prices have a sustained rise?
if oil prices moved higher and that on a sustained basis, and that led to a backup in gasoline prices, we've seen over the last several decades that gasoline prices factor very importantly into households' perceptions of the inflation landscape. If that happened, then that would be disturbing to policymakers, but that doesn't seem to be happening at the moment. So it's more of a risk that policymakers should be on alert for rather than a factor they have to respond to at the moment. And of course, inflation well above target, but the way the Fed is choosing to respond to that is with this higher for longer narrative, not the need to adjust the policy rate higher in the near term.
Aside from the oil question and just the price of it, is there any other larger economic ramification that you're watching to understand how some of the conflict is evolving in the Middle East, whether it does affect the economic landscape in a more material way?
Well, oil is the obvious factor, as you mentioned, but also we have to watch the kind of risk aversion trade, the flight to quality, what this does to the dollar, what this does to treasury yields, and that kind of financial channel, I think, will ultimately be the most impactful globally, and also for the kind of near-term U.S. outlook and the monetary policy response. Obviously, we've heard from a number of Fed officials talking about financial conditions. That's something they were focusing on a lot at the turn of the year. Then they got kind of quiet on that front for the last several months. But now, as they really feel like they're either at the end point or very close to the end point of the tightening cycle, we're hearing a lot of that discussion of financial conditions again. And of course, treasury yields, the shape of the yield curve, and the move in risk assets, as well as the currency move, all impact those financial conditions.
One thing Fed officials will not talk about, and they do not want to talk about, is fiscal policy, which they will say is out of their domain. This is, though, something that a lot of people have pointed to for the reason behind the higher borrowing costs, the higher treasury yields. How much do you think that's what's going on, that the fiscal backdrop has changed and the deficits become much more in focus versus an inflation forecast essentially baked into the bond market?
Well, I think it's a confluence of factors. So absolutely, the inflation forecast is a factor behind the move in yields, but also fiscal and also trade policy and foreign appetite for U.S. Treasuries. So it's really a lot of different factors at a unique moment in time where we're getting close to or at, we think we're at the end of the tightening cycle. So I don't think we can say, oh, it's all fiscal. But certainly, you know, the types of deficits we've been running in the pandemic and post-pandemic period absolutely are a contributing factor here.
Can you talk to me about wage inflation? I looked at ECI, which is wages plus benefits, folks. It's a brilliantly informative chart. And yeah, we've rolled over from sky high, I'm going to say 5% plus wage benefit inflation, sort of kind of like just barely. Carl, is that wage disinflation, is that trend in place?
It's a very light trend in place to this point in time. So, of course, the average hourly earnings data, they look great. You know, we've seen a big improvement on that front. But what really matters to the Fed is the employment cost index, the wage and salary component. We'll get the next update on the first day of their meeting, so end of October, before the November 1st rate decision. And the fact of the matter is, if you want to be on a sustainable trajectory to 2% inflation, you need wage cost, as measured by the ECI, running a little bit below 3% based on kind of some assumptions for productivity and historically what has been the case. We're running at about 4.6% right now, so we are well outside of the zone that would be consistent with that component I mentioned at the onset of our discussion here, the core services ex rents category. For that to be going down, you need to see tamer ECI numbers. We haven't seen it yet to a sufficient degree, but I suspect we're easing in that general direction.
Carl Riccadonna, thank you so much. Greatly appreciate it this morning with BNP Paribas. We have many voices on Israel. The news flow is really substantial right now. Not only the idea of a coalition government of some form, I'm using that as my phrase, within Israel. Again, we talked to our Ethan Bronner in Tel Aviv about the analog of that over to Churchill in 1940, but the basic idea here, Lisa, of the politics for Israel within the headlines of war.
especially at a time where a number of the people affected are also nationals of many other countries, whether the U.S. or whether the United Kingdom.
A different voice now, an important voice. Sisi Hatovali, I'll get that right. Help me here, Lisa. Israeli ambassador to the United Kingdom joins us this morning in her busy schedule as well. Ambassador, 6 years ago, in the conversation of the politics of Israel in the United States, you spoke about Jews in America leading convenient lives. I thought it was a brilliant comment of the distance of Israel from Judaism in America, speaking of convenient lives in America. Are our convenient lives, have they been shattered?
I think, in a way, every Jew in the world, his life's been shattered after what happened in the last 48 hours in Israel. I want to tell you from a personal stories because for me, I've been in Israel when the war started, and my husband and my 2 daughters are still in Israel. I just received my daughter's in a shelter at the moment because Tel Aviv is under rockets attack at the moment as we speak, and this is horrendous. We've never seen anything like that. And I'm speaking as someone who was experienced, I was part of the Israeli government. I've seen terror attacks in my life. And I must say, this is unprecedented, the way Hamas barbarically acted against children, against young women. We're speaking here about war crimes being committed by Hamas in the last 48 hours. The Israelis and the international community are exposed to those. I don't even have the words to explain how bad those atrocities are. And the videos on social media that I'm sure you've seen some of it. I've just seen the latest of a young Israeli child walking in Gaza, and Palestinian children are beating him up. Those are things, I mean, think about it. It reminds us dark times in the Jewish history. And this is our obligation, our first obligation, to fight back and to make sure Hamas will never have the ability to act against Israelis.
Ambassador Tzipi Hatovli, how are you responding to the fact that this is really creating a whole host of tensions around the world that have become sort of ethnically focused on both sides? It really has erupted debates and protests and anger on both sides. How would you like to angle the conversation to be able to foster something more productive?
I think that this is time to fight and to defend the people of Israel, and I think whoever saw the fact that 1,000 Israelis were killed in cold blood cannot speak now about both sides. There is one side here who's the side that wants freedom, democracy, cares about human rights, cares about people's life, which is the Israeli side, and there is the other side. This is good versus evil. This is so clear here that we are fighting, in one of Israel's darkest moments, we are fighting evil that the world haven't seen since the Second World War. And we need to fight it. It's a terror organization recognized in the US and in the UK. And, you know, many people are comparing to 9/11. And I heard many people that are making the equivalent numbers with the proportion. When you think about Israel as a tiny country, just 9 million people, it's actually 10 times of 9/11. And the disaster that the country is experiencing, this is something that any country in the world should support Israel now. We've seen Israeli flags here in London. We saw the British Parliament colors itself in blue and white. We saw number 10 Downing Street with a huge Israeli flag projected on. This is the time to support Israel. The international community should understand that if Israel is not protected, then the whole Western civilization is not protected, because those horrible things backed by Iran can happen everywhere.
Ambassador Hatovli, what do you make of some of the reports of Qatar, of the United Arab Emirates, of Egypt even acting as some sort of intermediary to negotiate hostage releases?
Hostage release is a very, very important mission at the moment. We call again Hamas to release every single individual, children, women, elderly women that were kidnapped by Hamas. Some of them were tortured. And we've seen horrible, again, videos and images that are coming from Gaza. And they are committing those war crimes, and the world must stop them to commit those war crimes. They need to release the people being kidnapped.
Ambassador, your politics is clearly to the right. That is the way it is established within the Israeli media and, of course, in the United Kingdom.
Let me help you with that. Yeah. I'm ambassador. According to the Israeli system, when you become a diplomat, you're representing the whole country.
That. Yes, of course.
I don't follow at the moment, the Israeli politics as a politician. I'm ambassador. I'm representing Israel.
Ambassador, I was talking to our Stuart Wallace about this news of a coalition or combined government within Israel. That is in your wheelhouse. Can that be successful? And how will a combination of Israeli politics be successful in prosecuting this war?
So first of all, it's clear both to the Prime Minister and to the leaders of opposition that there was never bigger necessity for a unity government in Israel than at this moment. And I speak on behalf of every Israeli. Israelis are united now. Israelis fight together, shoulder to shoulder. We see so many gestures coming from Israelis, want to support our soldiers, want to support the people that need help at the moment in Israel, that are in the front line. So they want to see the same reflection in our politics, and I'm sure that a unity government will happen, and it will be the reality. I hope sooner the better.
Ambassador, the Arab community speaks to different sets or different cohorts of Palestinians. Can the Arab nations assist Israel in speaking to Palestine away from Hamas?
You know, this is not something new. I mean, this is a process being going on over a generation. And in the last few years, as you know, there were dramatic breakthroughs between Israel and the Arab world with the Abraham Accords, with the ongoing negotiation with Saudi. So we are in times where the Arab world wants to be close to Israel, and the Middle East is changing. Unfortunately, this radical ideology that Hamas is leading based on ISIS mentality, this jihadi ideology, look at Hamas charter, look at what they want to do. They want to kill basically every single Jew. They don't recognize the right of Israel to exist. So when this is Hamas ideology, this is ideology must be fight. You can't negotiate with these people. You can't have peace with Hamas. You need to fight back because they started this war, and Israel will win this war.
Ambassador Hotovely, what do you make of some of the discussion around Iran? And there's been a lot of dancing around, you know, that they have backed Hamas, but that they weren't necessarily directly involved in executing it or orchestrating it. How important is that going to be, the determination of that, to determine the next step for the Israeli government?
Well, obviously, Iran is involved, and obviously, Iran is the big brain behind activating its proxies. But at the moment, we have this war to win. The war against Iran is something bigger than that, but the international community should know the real face of Iran and its proxies through those atrocities that Hamas committed in Israeli innocent people, including children and elderly. Can I say something? Just because my country is now in a point where almost 1,000 funerals are going to take place in the coming few days. This is a number we've never seen in our lifetime in one day. The president said yesterday that since the Holocaust, we never experienced a reality where so many Jews were killed in one day. And I'm looking at those stories. The Times has in the front page the Kedem family, Jonathan and Tamar, the beautiful twins, their son. They were all murdered in one day. Think about those families that were destroyed because of this barbaric attack. I think this is the day to mourn with the Israelis that lost their dear ones, their loved ones, those children being executed in front of their parents. Those are days to support Israel, and I think this is why I'm coming here to speak to you and all the people that care about the future of Western civilization. Israel is in the front line of this Western civilization, surrounded by very radical people, and we need to fight back, and we need the world's support in this very justified war.
Ambassador, thank you so much for joining Bloomberg today. Ambassador Hotovely is Israeli ambassador to the United Kingdom in our Queen Victoria Street studios. There is just the absolute raw emotion that Ethan Bronner, as a journalist, was mentioning to us earlier 2 hours ago as well in Tel Aviv. Just absolute shock. And it's not just the imagery and the social media. It's as you mentioned earlier, Lisa, we have to remind ourselves of 333 million versus, I believe, it's 28 million in Israel. The absolute shock of this touching every single family and community in Israel.
It's you can't really verbalize it. You can't really put it into words. It is horrific to watch, and we are all watching all of the violence unfold on all sides. It's shocking to see how much we are watching in real time as the tragedies of families really are laid bare.
We welcome all of you on Bloomberg Radio and Bloomberg Television. In this half hour, we are focused on the war in Israel. The news headlines out of Tel Aviv have been extraordinary just in the last hour as well. The idea of sirens in Tel Aviv, I can't expand on that right now other than to say we heard from the ambassador of the immediate danger to her family as they were seeking shelter. John Kirby will join us here in a moment from the Biden administration. He is delayed, obviously, in counsel to the president, speaking at 1 p.m. this afternoon. Someone with real knowledge of this and under crisis is our Michael McKee. You, of course, know him for just pristine analysis of economics. But, Mike, I want to go back to an earlier tour of duty with you. I don't think it was Lenin and what we saw in Russia, but it was certainly you were front and center in the Russian Revolution. And I'm going to go to Keynes. When the facts change, we change. Perceive this for Israel right now, not so much economically, but politically, economically, the facts have changed.
Well, the facts have changed. And the interesting question is, what did Hamas think they were going to get out of this? We saw a divided Israel for many months over the Supreme Court situation, and now it's pulled the country completely together. Where it goes from here, it's very hard to say. We don't know how firm Israel is going to be, put it that way, I suppose, with Hamas in Gaza. But it could certainly spiral out of control if the wrong things happen. So there's a lot to keep an eye on here.
Thank you, Mike McKee. And of course, we'll look to Mike McKee for important data later this week, particularly on CPI. This is a joy. He is a National Security Council spokesman. He is someone steeped in our defense discussion as the president speaks at 1 p.m. this afternoon. But far more, John Kirby has actually had tours of duty with the Navy. He has real-world experience that when the facts change, Admiral Kirby changes. Admiral, thank you so much for joining us this morning. In your briefings with the president and his team this morning, what will be the message at 1 p.m.?
The first and most important message that the president will deliver in his remarks is really about the United States' long-standing and continued support of Israel, of the people of Israel. Our sympathies, obviously, with the loss and the suffering and the shock that they're going through, but also our firm resolve to make sure that they can continue to defend themselves against these terrorist attacks and to take action against Hamas directly. So he will talk about the military assistance that we are providing and that we expect to have to provide going forward. Number two, he'll talk about the hostage situation and the crisis and the fear that that is also engendering in so many hearts and minds throughout the region, including here in the United States, and what the United States might be willing to do to help with the hostage recovery efforts. And then lastly, and this is not unimportant at all, it's a strong message for Americans here at home that that anti-Semitism has no place, neither does terrorism, and that the United States federal government will work with state and local authorities to make sure that our Jewish community throughout the country doesn't have to live in fear and anguish and anxiety, that we're going to make sure that we can look after Jewish community centers and places of worship.
John Kirby, from an Israel template, there is 67 and 73, and they were very different. To bring it to your Navy, Admiral Zumwalt didn't have to worry about social media. The immediacy, the speed of news today. How will this effort of Israel and the assistance of the United States change because of this modern news cycle, that crushing visibility of the terror that we have seen?
Yeah, I mean, you can't have a conflict today anymore where it's not being brought home to people in real time, in micro bits of information and imagery, and it really gives you a gut punch because it's right in front of your face, and everywhere you turn, you gotta feel like you have to react to it. It is really important in a crisis like this, particularly when information is so is so ubiquitous and so accelerated that when appropriate, you got to make sure you're slowing down and making the right policy decisions, that you're acting not so much in reaction to what's in the news environment, but what you actually need to do on the field of battle or in the information space. Make no mistake, and we saw this in 2014 in the Gaza war, the information, the narrative war was just as important as the bombs that were dropping and the explosions that were going off. That will be even more the case here in terms of making sure that, that there is a common set of narratives about who's at fault here, who are the victims, and what needs to be done to move this forward.
John Kirby, there's been a lot of discussion around the $6 billion that the U.S. released unfroze, I should say, for Tehran. It has not been released yet. I've seen some of the comments that you and others have made in the administration saying that not a penny of it's actually been transferred. However, what is the discussion around refreezing it? How likely and realistic is it that this administration will refreeze that $6 billion?
We don't have a policy decision on that to speak to right now. It has always been the case that money could be frozen at any time. We said that when we sent it over to Qatar and made it available to the Iranians. It's also important to remember that the regime, even though none of it's been spent yet, but even if some had been, the regime never sees a dime of it. They never get their hands on it. It goes right to vendors that we approve, who buy the humanitarian goods and ship them into Iran for direct access to the Iranian people. The regime will never see a cent of this.
A lot of people have said that this is sort of just a distraction from the real issue, which is that essentially Iran is getting a ton of money through the exports of oil, particularly to China. Despite sanctions, and the sanctions have been somewhat lightened, how much is the U.S. talking about enforcing the sanctions in a more significant way, or the ineffectiveness of those sanctions? Somewhat lightened. How much is the U.S. talking about enforcing the sanctions in a more significant way, or the ineffectiveness of those sanctions?
I would push back a little bit on the idea that sanctions have been lightened. We have not lightened any of the sanctions. In fact, we've added additional sanctions, some 400 sanctions on Iran just since the beginning of this administration. And we're absolutely committed to full and total enforcement. Now, obviously, other nations have to enforce their sanctions as well, and certainly we talk with them about that. But the United States has not backed off on any sanctions. Quite the contrary, we've added and increased our enforcement capability. Not to mention, we have increased our military presence in the Gulf region and now, of course, in the Eastern Med to deter would-be actors like Iran who might want to try to take advantage of this situation.
So far, there's been a distinction drawn by both U.S. and Israeli officials saying that while it is clear that Iran has been involved in backing Hamas financially, it is unclear whether they were directly involved in orchestrating this particular attack. What is the difference from a policy perspective? What would the U.S. do and Israel do should Iran be determined to have been intimately connected with orchestrating this attack?
I won't get into speculating about what policy decisions we might or might not make based on where the information and the intelligence leads us. All I can do is reiterate what we've been saying. We haven't seen any specific tactical intelligence or information evidence that points to Iran's participation in these particular attacks. Now, clearly, and we've made no bones about it, that there is already and has been for a long time a degree of complicity by Iran here because they've been supporting Hamas for many years. Training, capabilities, resourcing, certainly rhetorically in just the last 24 hours, the supreme leaders out there praising this attack by Hamas. So there's a degree of complicity, but we just haven't found any direct evidence. And quite frankly, neither have our Israeli counterparts.
Admiral Kirby, with great respect, and I don't want you to give away the family secrets, but the conventional effort is like a Boeing, the Sentry E-3 intelligence aircraft. You put a couple of them up in the air and gather intelligence. This is 2 million people in a highly urban landscape squeezed into a geography that is 2 Washington, D.C.s. How do you prosecute intelligence against an enemy sandwiched in among 2 million people?
Very difficult. very difficult to do. I won't speak for the Israelis. Of course, this is really for them to talk about. We will obviously and continue to share intelligence with them and offer them help in intelligence gathering. Of course we will. We always do. But it'll be a task really for them to work on. But it is very difficult, very dense, very, as you said, urban, and very, very heavily populated. And Hamas, this is just another example of their barbarity, using Palestinians that live in Gaza as human shields, hiding in mosques and residential buildings and hospitals as command centers. I mean, this is what makes it very, very difficult for precise targeting.
Admiral, one final question, and I must speak to the Navy. The Gerald Ford is in the area. Is it properly staffed? Is this a U.S. Navy that can develop the manpower, the sea power to staff not only that aircraft carrier, but the many other ships involved?
Yeah, the Gerald Ford Care Strike Group is now in the Eastern Mediterranean. As you rightly said, it's not just the aircraft carrier and the embarked air wing of more than 80 aircraft, but it is several ships and around it in its periphery. They are all fully manned. They're all fully trained. They're all fully ready and fully armed to look after American national security interests in the region. That was one of the messages that the president wanted to send by moving those forces there, that nobody should take advantage of the situation in Israel, and that the United States will always make sure that our national security interests are first and foremost as well.
Admiral, thank you so much. John Kirby of the National Security Council. Before the president speaks at 1 p.m. I'm going to go back to my arch theme, Lisa, which is I'm overwhelmed by the modern media. The visibility is Admiral Kirby mentioned. We see the leadership of Iran with a Palestinian flag around their neck, et cetera, but it's still a war. And the war is the war. It's a conventional war like any other war with a lot of damage.
But one thing that Admiral Kirby said there was that we're all experiencing it in real time in social media and in some of the imagery, the horrific imagery, the really tragedies that families in Israel are dealing with right now.
We'll have continued conversation on this. Of course, the president speaking at 1 p.m. This afternoon. Look for balance of power tonight. Leon Panetta, the former Secretary of Defense, with Amory Horton and Joe Matthew. Good morning.
Live from New York City this morning. Good morning, good morning. Your equity market on the S&P 500, positive Friday, Monday this morning, just about positive 0.1%. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, The Open, with Jonathan Farrow.
Live from New York, coming up, Israel preparing for the next phase of retaliation, helping to fuel a major rally in the Treasury market as Fed officials play down the need to do more. We begin with the big issue. The Treasury market rebounds.
In terms of the bond market's around. There's been such an incredible move in yields, particularly over the last month. The upward trend in yields. It's not surprising to see a little bit of a move back.
It is a risk-off sentiment.
Risk aversion that you've seen over the last few days also.
I mean, clearly there's an element of safe haven status going on here.
Treasuries to behave at that safe haven status like they have in the past.
Given the Fed speaks lately, it's the reaction from financial markets that has finally caused the Fed to maybe take a pause.
The market is doing a little bit of the work for them.
A lot of the work for the Fed.
The market is doing the Fed's job for them, and maybe they won't have to go quite as far.
The Fed is likely done with hikes.
We do think that bond yields will trend lower from here.
We can't believe that there's been a pivot in the space of 2 or 3 days.
It's really hard to know where we go from here.
Joining us now to discuss, Jim Bianco of Bianco Research, Mike Kontopoulos of RB Advisors. Jim, looking at this move this morning, yields down something like 10 basis points right the way through the curve, two's out to the 10-year yield down 10 basis points to about 470. Jim, in your mind, is that risk aversion or Fed speak?
Oh, I think it's probably more Fed speak at this point. If you go back 24 hours ago, the bond market had reacted to the weekend events, and I'm talking about futures trading in German bunds at this point, and it was largely unchanged. Then we got a bunch of Fed speak yesterday about higher for longer and no more rate hikes, and then you had the big move throughout yesterday. So it seems like it's more about Lori Logan, who's the Dallas Fed president, Richard Jefferson, who spoke yesterday, than it is about what happened in the Middle East over the weekend.
Jefferson, Logan, Daly, all over the last week. Mike, it's kind of amusing, isn't it? They're happy for the market to do the work for them, then the market stops doing the work for them. What's that going to mean for their next meeting?
Yeah, I was going to say the exact same thing, Jonathan. I mean, you know, another couple days of lower yields and all of a sudden hikes are going to be back on the table. I just don't see, given the labor market dynamics that are clearly, you know, maybe not, you know, white hot, but red hot, some of the bottoming and the PMI data, et cetera, that, you know, the Fed is not going to get another hike in at some point. And, you know, instead of saying, you know, asking the question, are they going to pause in November? Are they going to hike again this year? You know, maybe the market needs to start asking how many times are they going to hike in 2024? You're just not seeing the slowing that, you know, many market participants thought that you would see. Inflation's not anywhere close to 2%. And it doesn't seem like things are breaking yet, just as when earnings are starting to accelerate. And so, you know, surely at some point, there will be a point in time where the Fed is done and cutting interest rates and probably have a hard landing. But I just don't see that in the next 6 months or so.
It's the 3-month rolling recession call, Jim Bianco, and it keeps rolling. It keeps getting pushed out. This is from Morgan Stanley. Seth Carpenter and the team over there holding on to this baseline view that the last hike from this Federal Reserve was July, and ultimately they're relying on the noticeable slowing in the fourth quarter to stay the Fed's hand. Jim, you're taking the other side of that, aren't you?
Yes, I am. The whole idea that the recession is 1 to 2 quarters away is now going on 18 months. And I guess if you say it long enough, eventually those 1 to 2 quarters away will eventually materialize. But right now, it hasn't been. And if you look at the payroll number from last week and some of the recent data, and even the upbeat outlooks that we've had going into this earnings season, and I know it's early, it's hard to make the case that we're seeing some kind of a real recessionary slowing in the economy. Yes, there are sectors of the economy like housing that are struggling, but there's always sectors of the economy that are struggling. So the idea that, don't worry, we're going to see a slowing of the economy to justify the Fed being done and rate cuts next year has been wrong for 18 months. And I just don't see evidence right now that the tide is turned and that that's going to be the right call.
So, Mike, are you actually considering rate hikes from this Fed next year?
Oh, absolutely. I think you have to consider it. I don't know why you wouldn't, Jonathan. I mean, earnings growth, to Jim's point, is starting to reaccelerate. I mean, the earnings cycle bottomed several quarters ago, and growth is just still too hot. You know, I think they're going to pause at some point for a quarter or you know, a couple meetings. But my guess is their hand's going to be forced and that they're going to have to hike again at least a couple more times. I mean, financial conditions aren't that tight at this particular juncture. I mean, this is really a big conundrum for the Fed because the stronger growth is today, the harder the landing later. The problem is just, you know, to Jim's point, when is later? Is it 6 months from now? Is it a year from now? We don't know. And I think between now and whenever that landing is, yeah, the Fed's going to probably have to hike again.
Mike McKee, Daly, Jefferson, Logan, all suggesting this market is doing the work for them. It's not anymore, Mike, is it?
Well, we're one day into that, not anymore, but let's take a look at what we've seen so far. The 10-year note yield, along with the belly of the curve, rising a lot, and that's been pushing up real rates. You can see the 10-year, the white there, the real rate in the blue, and that's what the Fed officials are talking about. And as you mentioned, we've heard from a number of them over the last couple of days, including one that got a lot of attention, and that was Lori Logan, because she's been a real hawk. She noting if the term premiums rise, they could do some of the work of cooling the economy for us, leaving less need for additional monetary policy tightening. That followed very similar remarks from Mary Daly, the San Francisco Fed Bank president, a few days ago, noting that financial conditions have tightened a lot, and that might mean they don't have to take further action. We'll see on Thursday what we get out of CPI, and we'll see if these bond market moves continue. You can see here the difference. The bond market was closed yesterday, and I said we needed to watch what would happen today. Whether you call it a flight to safety or whether you call it Fed speak driven, you can see that yields have come down on the 10, and that has pushed up just a little bit the odds of a Fed hike in November, but we're only at 16%, down from Monday morning at about 30%. So at this point, the bond market writing off the Fed, but as we have seen so many times, we can reverse that very easily.
Mike McKee, thank you, sir, for the update. Tomorrow, of course, Fed minutes, PPI data. On to Thursday, you'll get CPI data. Looking at the bond market screen this morning, big rally, yield to lower. Two reasons for it. Out there at the moment, the Fed speak, some doves, Logan, Jefferson, Daly as well. Mike McKee talked to that, spoke to that. Also, that risk aversion flow. Didn't get it yesterday, Treasury market was closed, getting it a bit this morning. Jim Bianco, I remember you saying weeks ago that oil would take center stage. Has it taken center stage?
Oh, I think it has. I mean, we've already got about a 25% rally since late June. And now with the tensions in the Middle East and the big 4% rally yesterday, we're all going to be focused on oil. Has it taken center stage to bother markets? Not yet, but if this uptrend continues and reinserts itself, I do think it will become front and center. And it is probably the market metric that we'll be watching to see what kind of a market or financial impact we can expect from Middle East tensions.
So, Jim, with that in mind, if higher oil prices is the price to pay here in the market off the back of this, is that a reason for bonds to rally on risk aversion, which leads to higher prices, or a reason for the bond market to sell off on inflation risk? Which one is it?
Yeah, that's the old conundrum with oil. Is it a tax on the consumer or is it inflation? I think in this environment, it's more inflation. Now, I don't expect the Fed to raise rates because oil goes up, but the default argument is if oil were to go up and take gasoline prices with it, it further pushes any idea of a rate cut well into the future. That you just can't do it if you're wanting to see, if you're seeing national price of gasoline go through $4. That is cutting rates. So don't expect them to raise them. Just you could forget about rate cuts.
Mike, do you share that conclusion?
Yeah, I think that's right. I mean, if you changed monetary policy, based on oil prices, you'd be changing, from tightening to loosening every other month. And so I agree with Jim. It's not going to change necessarily the Fed's calculus. It probably, for a period of time, has a bigger impact on inflation. But listen, there's certainly a level to which, gas and oil goes to where it really does start to hurt growth. I'm not sure if that's north of 100 or 110, whether or not the economy can handle 85 or 90 is probably the case. But certainly level does matter into where it sort of begins to go from inflationary pressures that are the concern to growth concerns. But we're certainly not there yet. And so I think, it's more of an inflationary impact and but not going to affect the Fed very much.
Mike, give me your bond market call now. Considering rate hikes in 2024, what are you considering on a 10-year yield?
It's interesting, Jonathan. I have a little bit of a different view, I think, than a lot of folks out there. In my mind, the more the Fed hikes, the safer it is to be in something like the 10-year. I know that sounds counterintuitive, but think about what's happened over the last several months. The Fed's ratcheted down hikes from 75 to 50 to 25, has also ratcheted down the pace of hikes to every other meeting or so. At the same time as growth and inflation are stubbornly elevated, if not reaccelerating. So the market is telling you that the Fed is losing credibility, and I think that's why you've seen this bear steepening. The long end of the yield curve, of course, represents growth and inflation expectations. So there's an irony if the Fed actually can get back into control in the market narrative by indicating some more hawkishness, you may actually see stabilization in the long end of the yield curve as the market starts to price, a come down of growth and inflation and ultimate hard landing. That's, of course, what's been priced out. So I think that at current levels, you want to be pretty fairly balanced in your interest rate risk. Take maybe some cyclical duration out there from counter-cyclical duration and, avoid credit risk, as I've been saying for some time.
Big rally this morning. Mike, thank you for your view. Mike Contopoulos there and Jim Bianco. Big rally in the bond market. Looking at the equity market this morning on the S&P 500, positive here by 0.1%. Let's get you some movers going into the open. Here's Abby.
John, it's really interesting that big rally in the bond market with yields down is not driving a big rally for stocks. Right now, investors tiptoeing through in a bullish manner. But one tech stock that is climbing higher is Microsoft, up about 0.4%. Apple's, Tesla's, those are still down just a little bit. So investors are a little bit cautious here. Microsoft also getting a lift from Morgan Stanley, naming it, continuing to name it a top pick on AI, cloud, and security strength. Lockheed Martin, after rallying about 9% yesterday, the best day since March of 2020 amid the Israel Israel-Hamas conflict, now heading to an third up day in a row, up 2% in the pre-market. And then Palantir returning to technology. The data software company has disclosed a new Army AI contract worth up to $250 million. Investors seem to like it. That stock up 2.8%, and perhaps a little bit of a lift there from yields down, John.
Abby, thank you. Coming up on this program, Israeli Prime Minister Benjamin Netanyahu standing strong.
We didn't want this war. It was forced upon us in the most brutal and savage way. But though Israel didn't start this war, Israel will finish it.
The Israeli military preparing for the next phase of conflict. Team coverage up next.
What do you worry most about your economy in Greece? And when you look at tourism, it's booming, but it also means some of the islands are overcrowded.
Exactly.
Is there something that you can do about that?
Thank you for asking this question, because I want to make sure that, in 5 years from now, we will not have sacrificed, the beauty of our sort of natural environment at the interest of a very rapid growth. So that's why I'm really focusing on sustainable growth. That's why I will always push for quality over quantity. Very strict in terms of standards. We are actually looking at our local and regional sort of planning legislation across the country to make sure that we know exactly what we can build and where we can build it. There are parts of Greece which have reached saturation point, and if we have to place restrictions, we will, in order to protect, especially islands, which are more sensitive.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
I want to thank President Biden for his unequivocal support. I want to thank leaders across the world who are standing with Israel today. I want to thank the people and Congress of the United States of America. In fighting Hamas, Israel is not only fighting for its own people, it is fighting for every country that stands against barbarism.
Israeli Prime Minister Benjamin Netanyahu praising President Biden for his support. The Israel-Hamas conflict entering its fourth day. Israel carrying out strikes overnight and building a new base near the Gaza Strip to accommodate additional troops. President Biden speaking about the conflict at 1 p.m. Eastern Time today. Let's get to our team coverage. Bloomberg's Ethan Bronner in Tel Aviv and Anne-Marie in Washington, D.C. Ethan, first to you. What is the state of play as we wake up this morning in New York, looking over to your Israel?
Hey, Jonathan, look, I mean, the storm clouds are gathering. We have hundreds of thousands of men in uniform on the border. We have people driving away in southern Lebanon, afraid of what's going to happen there. We have people in Gaza trying to find a place to be safe, which is not easy. More people are dead. More bodies have been found in this country. So we are on the verge of what looks like a major military endeavor by Israel to destroy the Hamas military infrastructure. It will be a while, and it will not be pretty.
MH, we were expecting to hear from the president a little bit later on this afternoon, and some people expecting perhaps some comments on the nature of the retaliation. What are you expecting to hear?
Well, the president's going to strike a tone, Jonathan, of commander-in-chief. He's going to talk about the unwavering, unequivocal support the U.S. has for Israel. Potentially, he'll talk about a new tranche of aid that the U.S. could send to Israel. This comes after the U.S. sent warships over the weekend, moving closer to Israel in the eastern Mediterranean. And then also, Jonathan, he's going to strike the tone of consular-in-chief. This is a president that will likely, most immediately when he comes out, talk about the 11 American lives that have been lost, the potential that that death toll can increase, and also, Jonathan, the fact that it is likely that there are American hostages in Gaza taken by Hamas. We already know that the president, in this statement he put out yesterday, talked about the fact that he has his team working with their counterparts to try to track down any Americans that are there. And also, we do know that the FBI as well has put this as their top paramount concern.
Anne-Marie, Ethan, to the both of you, thank you. Terry Haynes of Pangea Policy weighing in on the latest developments in the Middle East, writing the following. Geopolitical experts shouldn't be trusted by investors today for the Middle East direction of travel. Israeli intelligence and US intelligence didn't anticipate the Hamas attack. Neither did those who hold themselves out to markets as geopolitical risk experts, who now will overcompensate. Terry, I'm pleased to say, joins us now. Terry, let's walk through the big question I think we all have at the moment, and that was whether there was direct involvement to the actions that we saw over the weekend from Hamas, from Iran. The answer to that question, Terry, is going to be difficult to get in the coming days, but does that shape the ultimate response from Israel in the coming weeks and months?
I think it's a contributing factor in the Israeli response, certainly. It's also a contributing factor in exactly how the United States responds. There's been a lot of good reporting on Iran, and so far it has more credibility than the cautious non-denial denials of the United States side. What I'll also point out is Senate Republican leader McConnell going out yesterday in a Wall Street Journal piece saying, among other things, that it ought to be a priority of the United States not only to increase defense spending in real terms, something I've been predicting for months, but I mean, not because of this, but that's generally been the Republican posture, but also McConnell saying that we really have to get to grips with Iran and deal with the Iranian question much more forcefully than we have been. So that's going to be top of mind for a lot of United States policymakers.
Terry, in your mind, have we turned a blind eye to Iranian crude production in the last few months?
I think what we've done is I wouldn't say a blind eye necessarily, but I think it's the triumph of hope over experience more than anything else. And I think we've been a little feckless about how we've gone about it. And I think the question of the Iranian $6 billion is really the tip of the iceberg there. The non-enforcement of sanctions also sends exactly the wrong message at the wrong time.
We started this conversation about the potential for escalation abroad. Let's talk about the dysfunction at home. I was reading your note yesterday evening and pushed back against a lot of happy talk in Washington, D.C. I'll use some of your language and ask you the question if you believe this is a transformative moment for the dysfunction plaguing Washington, D.C.
You know, as a citizen, I wish it were, but it's not. You know, what you have is a situation where, you know, markets now are starting to pay attention to debt and deficit in the United States and fiscal spending in the United States for the first time in at least a generation. And what you've got is very small ball in Washington. You've got dispute over essentially whether or not 1% out of 30% of the annual spending of above line spending in the United States is going to be cut or not. That is not the response markets are looking for. And generally speaking, I can't imagine that anybody thinks that's a comprehensive response to the kind of out of control over a generation spending problem that we've now been accustomed to.
You heard the conclusions people were drawing, Terry, off the back of the events over the weekend, the absolute massacre that played out in parts of Israel. Are speaker selection odds higher? Are shutdown odds lower? A lot of people started to assume they were. Terry, what do you say back to those people?
I think you're absolutely wrong about that. The House will take the time it needs to put together a speaker vote, and right now, partially reporting, partially instinct, I don't think they're close to that. That doesn't mean they won't get it in the next week or two, but they're not close to that today, I don't think, as we speak. Number one. Number two, when you're thinking about lowered shutdown odds, what you're saying is that you don't take the House Republicans seriously on their desires to cut spending and actually have more border security. I think events so far prove that wrong. You know, the bottom line, I think, is that you're going to have a situation here where shutdown is still going to be a reality for some time. As I've said to you before, John, there is a 3-month window here. Defense spending probably doesn't get finished before the end of the year. And when it does, everything else snaps into place. If the defense spending timeline speeds up as a result of this, no evidence that it will today, then you'll see a speed up and a likely shutdown diminishment. Until then, things haven't changed.
Terry Haynes, thank you, sir. With the reality check over at Pangaea, if you believe the selection odds for Speaker of the House are higher, shutdown odds are lower, Terry has a message for you. You're wrong. Coming up, the morning calls and later, John Hancock's Emily Rowland recommending investors start buying more defensive sectors in the equity market. That conversation is just around the corner. The price action at the moment shaping up as follows going into the opening bell. Equities up by 0.2% on the S&P 500. 2 days of gains. Can we make it day 3? And in the bond market, a big rally. Yields are lower by 11 or 12 basis points. Your yield on a 10-year, 4.69. The haven flows kicking in. The Treasury market missed out on them yesterday, given that it was closed. Throw in some dovish Fed speak from Logan, Jefferson and Daly in the last week, and a rally commences. From New York, this is Bloomberg.
Everybody want to be a consultant, and what are all these consultants doing?
Well, David, I think that we actually defy the label consultant, because sometimes consultant seems to imply that we only give advice. And when you look at what Accenture does, we're really different than the traditional version of a consultant. We're really about relevance and results, and that's what is driving our business.
What about a consulting project? In my example, I'm the CEO, I have a problem, I call you up, I say, solve my problem or give me a solution.
We don't operate as big companies permanently in crisis mode. And so when you think about, like, how long does it solve things, a lot of it starts with, you know, the company being willing to set aggressive goals. And so what we are trying to do now is work with our clients to work differently and to work faster.
On the David Rubenstein Show, peer-to-peer conversations, I uncover the untold stories of the world's most successful leaders.
Watch Wednesdays on Bloomberg Television.
We are about 5 minutes away from the opening bell this Tuesday morning. We are pushing higher by about 0.1% on the S&P. 2 days of gains. Can we make it day 3 on the Nasdaq higher by just 0.02%? Bond market rally looks like this. The rally continues. Yields lower by about 10 basis points on a 10-year. So let's call it 470 on a 2-year, a break of 5%. We're down about 10 basis points on the day, 498.43. The haven flows into the Treasury market, picking up this morning. Closed yesterday, of course, in the Treasury market. And throw in some dovish Fed speak. Tons more Fed speak a little bit later on in the session. That's the price action. Let's get you some morning calls. First up, JP Morgan downgrading Corning to neutral ahead of earnings, citing concerns about the company's growth prospects. Next up, UBS upgrading Rivian to buy, $24 price target, pointing to an improving setup and strengthening fundamentals. And finally, Bank of America upgrading Electronic Arts to buy, highlighting the stock's attractive valuation and multiple tailwinds heading into earnings. Their stock is up by 1.3%. Coming up, John Hancock's Emily Rowland making the case for defense. That conversation is coming up next. Your opening bell is just around the corner.
Obviously, we were trying to create shoes for me to wear in the Olympics, and that was happening pretty quickly. And then just understanding a new industry and how shoes are even made. But as we went down that path and started to just learn and research more, we learned that shoes have not been made for women. What that means is a shoe is made off of a last, which is a mold of the foot, and it's the mold of a man's foot used to make women's sneakers. And I think it took time for us to really grasp that, because, you know, we've been in shoe stores and we've gone to the women's section and it's like, no, there are shoes for women. Like, what's this over here? And then to really understand, like, all of that is marketing. This is just a man's shoe, like, in a different color. And so that kind of eye-opening experience was just like, okay, we got to do this. And even more than making the shoes, like, there's a deeper purpose here. Like, women deserve better and we shouldn't be an afterthought.
This is Daybreak Europe. I'm Kriti Gupta. Let's get to the stories that set your agenda.
Taking you from the U.S. market's close.
A lot of this was priced into the U.S. session.
To the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Two-day rally on the S&P 500 going back to August. Can we add to it? About 20 seconds away from the opening bell this morning. Good morning to you. Positive by 0.2% on the S&P, on the Nasdaq up by 0.1. Lots to talk about in the bond market. Your equity market opening bell rings. Switch to the board and get to the bond market. Yields look like this. Lower by 10 or 11 basis points, and potentially one of the biggest one-day moves lower we've had going back to spring. 469.45 on a US 10-year yield this morning. With that, some dollar weakness, some euro strength. 105.92 after briefly breaking 106. That currency pair positive by 0.25%. And WTI crude, 86.30, positive by 0.1%, negative rather, by 0.1% this morning. The broader market, about 20 seconds into the session. Let's see how positive we are on the S&P 500. We are higher by 0.2%. A very similar move on the Nasdaq. One stock to watch at the open is PepsiCo, reporting better than expected Q3 results and raising its outlook. The CFO saying this: overall, it's a pretty healthy consumer. When they fill up their tank, they're still buying a Pepsi and a bag of chips. Abby, I'm not sure if that makes them a healthy consumer or not, but that's your call.
I'm not sure either, John. And they're also talking about one of the snacks that's really driving sales right now are their Doritos spicy pineapple jalapeno chips. I'm not so sure that that would be appealing to me, but they did put up a really strong quarter here, and the stock is having its best day since July 13th. So they beat earnings handily. Revenue rose 7%. But what's so interesting about it has everything to do with hiking prices. This is the 7th quarter in a row where they have hiked prices by double digits. Sales volumes, on the other hand, fell by 2.5%. And they're saying that the price hikes reflect items such as the cost of cooking oil going higher into some of those snacks that they need to produce. Now, also interesting, John, is they talked about these appetite suppressing drugs last week, or the week before, actually. Walmart disclosed that they think that they're seeing less demand for food as investors, or excuse me, consumers are shopping less for food as they are taking these appetite suppressant drugs, causing people to want to eat less. Pepsi is saying they are not seeing that, but they're on the outlook for it. And if they were to see it, maybe they would change to smaller snacks or different snacks along those lines. In fact, John, they've actually raised the full year view. So PepsiCo off of its highs, but nonetheless a nice result.
Upgrading the guidance, Abby, thank you. We're high by 0.7% there. Turning to China, hardly talked about this story this morning. US-listed Chinese stocks moving higher after we've reported that Beijing is considering a new round of stimulus measures, as well as raising its budget deficit for 2023. Simone Foxman on top of this one. Hey, Simone.
Hey, John. Yeah, that Bloomberg scoop, one of the main drivers we're seeing for this enthusiasm in U.S.-listed Chinese shares, that enthusiasm was present during the Asian session. According to these sources, measures include issuing at least 1 trillion yuan of additional sovereign debt. That's roughly $137 billion. To spend on infrastructure like water conservancy. Infrastructure spending is the classic way for the Chinese government to really boost an anemic economy. We already saw the provincial governments go out and issue more debt, accelerating their pace of issuance as well. Now, Credit Agricole CIB describes this issuance as modest, but the message is positive. And Titan Asset Management says this is likely going to focus a lot on the tech sectors. You're looking at some of those tech names on your board right now, and one that's not here as well, but leading the charge in early trading is Bilibili. Shares there up 5.2%. One of the other reasons we may see this enthusiasm concentrated in the tech names is that a joint statement from a bunch of Chinese agencies said the government is targeting adding more than 300 exaflops of computing capacity across the tech sector. Now, an exaflop is a measure of performance for a supercomputer that can calculate 1 quintillion, so 10 to the 18th floating point operations in a second. Plans to build up additional 20 smart computing centers, bigger optical networks, advanced data centers through 2025. So that enthusiasm around those plans may also be what's carrying through into these names today.
It sounds like a big number, that's for sure. Simone, thank you. Alibaba up by 1.9%. Let's turn to the autos. UBS upgrading Rivian to buy, seeing a better setup following a recent capital raise. The analyst saying this: with the raise out of the way, the market can refocus on improving fundamentals, with capital likely not needed until the end of 2025. Ed Ludlow tracking this. Morning, Ed.
Yeah, good morning, Jonathan. The response to Rivian announcing a $1.5 billion convertible debt deal has been mixed, as you'd expect on the sell side. UBS, as you mentioned, kind of positive on this, saying that A, it removes the question over the need to raise capital, and they now think that Rivian will not need to raise capital through at least 2025. Mixed because you think back to yesterday, Wedbush had a very different view, cutting its price target on Rivian and basically labeling the convertible as a misstep. Last Thursday, the session after they'd announced the convertible, the stock fell 23%, the biggest drop on record. And where Rivian stands now is they have $9 billion of cash on hand. UBS are going with the positive, saying that this shores up the balance sheet, but they also now can focus back on the fundamentals. A big underlying story is that Rivian has not really budged guidance from the 52,000 units that it plans to build this year. And there's like this growing frustration amongst investors about how Rivian's leadership communicate with investors on timing. When they announced the convert on October 4th, some on the sell side said, well, this happened a bit sooner than we thought. It will obviously have a dilutory effect on the interests of current shareholders going forward. All in all, it's a company that's building EVs, different from others.
Ed, thank you, mate. Stock's up by 2.5%. Looking forward to the programme a little bit later with Ed Ludlow and Caroline Hyde, Bloomberg Technology at noon Eastern Time. Do two things right now. Take a look at the bond market, big rally, yields lower. Take a look at the banks. That positive correlation between treasuries and banks continues. Treasuries rallying, banks running as well. Bank of America up by about 1.7%. Going into earnings next week. JP Morgan kicking things off on Friday. Those results just around the corner. Let's turn to the financials. Truist reportedly in talks to sell the rest of its insurance brokerage to private equity firm Stone Point Capital for roughly $10 billion US. The CEO saying earlier this year the unit has continued to perform extraordinarily well, and we will continue exploring strategic options to maximize shareholder value. Katie Greifeld has this one. Hey, Katie.
Hey, John. Yeah, Truist up more than 5% on the heels of that Semaphore report that, like you said, the regional bank's in talk to sell the rest of its insurance unit over to Stone Point for about $10 billion. Now, remember, Stone Point led the investor group earlier this year that bought about 20% of the insurance business for about $1.95 billion. Now it appears that Stone Point is coming for the remainder. Though, according to Semaphore reporting, it's important to note that talks have yet to reach a conclusion and may depend in part on Stone Point's ability to obtain financing. Now, Truist might be motivated here to sell as part of its efforts to shore up its balance sheets. We all remember what happened with the banks in March, and Wall Street seems to be welcoming this move. Citi actually wrote that the remaining sale for the stake for $10 billion, that would imply a, quote, larger valuation of $12 billion, or about $2 billion greater than February's original common equity valuation. So the valuation going up here would definitely help explain the rally that we're seeing this morning. True is currently up about 5.3%.
Katie, thank you. John Hancock's Emily Rowland with this to say, weighing in on the macro environment, saying the equity market is telling us that high yields are going to make things harder for more cyclical businesses as restrictive borrowing costs hurt the consumer. Against this backdrop, we would consider adding defensive stocks like healthcare and utilities, which are now on sale. Emily, I'm pleased to say, joins us right now. Emily, let's go there. Utilities are on sale because of high yields. Consumer discretionary is down because of high yields. Why do I want to avoid one and buy the other?
Yeah, John, we see a lot of challenges coming up for the U.S. consumer based on really the higher cost of capital. So what's happened is that you've seen better economic data in the U.S. So we look at things last week like the ISM manufacturing index coming in at 49.0 with new orders at 49.2, so picking up. You've got JOLTS coming in better at 9.6 million. That blowout jobs report last week, let's not forget it, 336,000 with significant upward revision. So what's happening right now is the stronger economic data really means that the U.S. Federal Reserve is probably going to be the last hawkish central bank standing. The downside to this is that there's even more tightening being put into the system. So we look at 30-year mortgage rates, hitting a 23-year high last week. Mortgage applications hitting a 27-year low. So we think what happens here is that there are significant challenges here, not only to the housing market, but also to the broader economy. So if you lean into less cyclical areas of the market, parts that have not as much of a need to tap the capital markets, more durable profitability, less of an interest burden, that's where we think investors should go. So it's really about this combination of quality and defense that we think makes sense in portfolios.
Emily, when we get the bank earnings on Friday and through next week, are you expecting those results to speak to that slowdown you're anticipating?
Yeah, I think that's what everybody is looking for, is are we going to get a read on the U.S. consumer? And when we look at earnings growth more broadly for this quarter, this is the last quarter where negative earnings growth estimates are being penciled in for the market. So the bar is pretty low. When we look into the financial sector, about 9.3% earnings growth is expected for this quarter. There are some tailwinds there for the financials. We've seen a doubling of interest rates since Q3 of last year. Remember, the Fed's funds rate was only between about 1% and 3% this time last year. However, the yield curve was steeper last year, so that could play into things. And then, of course, we'll look to see how those loan loss provisions get factored in as these challenges to the consumer persist. I think the consumer is fine right now. Certainly, we talked about the employment dynamics. The labor market's really healthy. Consumers are still okay, but I think there's a lot of mounting evidence that they may be starting to pull back here, again, as the cost of borrowing is so elevated.
I mean, we talk a lot about the
financials trade on higher interest rates, and that relationship is really broken down, but we haven't seen a backup in rates to this extent really in modern history. We have to go back a really long way to see a Federal Reserve that's raising rates by over 5% in an 18-month time frame. That's just really extraordinary. So I think markets, investors are more focused on how that changes the narrative in terms of tipping the economy into recession. We all know that the Fed hikes until something breaks, and everybody's getting incredibly impatient to sort of wait and see how that plays out and how the economy ultimately tips into recession as this tide of liquidity is removed from the system. But that's really what we see, I think, Treasury markets reacting more to, or banks reacting more to now, is how is that challenge to the consumer? How is that challenge from tighter financial conditions going to impact banks? They're more cyclical. They're not our favorite thing for a late cycle environment.
Emily, what is your favorite thing for a late cycle environment?
Yeah, so again, it's this combination, I think, of quality and defense. So I think there's going to be a big change in consumer behavior. People might not buy that next consumer discretionary item, but they're still going to turn the lights on and take a shower and go to the doctor and, I guess, eat those Doritos. So I think that sounds terrible to me, but I'm sure my 13-year-old would love those. So I think you're going to see a bid for the things that people need to do. So areas like utilities, defense, think infrastructure, think toll roads, data centers. I think those are areas that we like. Healthcare has got a 20% return on equity. It's actually trading at a 10% discount to the S&P 500. So those are areas that have sort of been left in the dust until very recently. And we think that the baton can be handed over to them as we head into the back half of this year and into 2024.
Let's put a bow on it. You're looking for a slowdown. Morgan Stanley has said they're looking for a noticeable slowing in Q4. We had two guests to start this program today, Emily. Jim Bianco, one over at Bianco Research, Mike Contopoulos over at RB Advisors, who said they're not looking for a slowdown. Why do you think it's different this time after we've seen so many people get this call wrong time and time and again through 2023?
Well, it's a timing thing, and I listened to Jim, and I agree with him. I think things could be okay for a little while longer. You know, you look at the yield curve inversion, we're at about 12 months right now. You look at, if you look at the Fed funds and 10-year rate, you look at the leading indicators, they've been negative for about 13 months. We have had periods where those dynamics have persisted for 16 to 18 months. It was back in 06, 07 as the latest example, but the economy's reaccelerating. 336,000 jobs. We don't have a problem right now. So I think in earnings season, the bar's low. You could get decent earnings in the fourth quarter. So I think it's a timing thing. We could see 3 to 6 months of pretty decent economic growth and pretty good signs from the corporate side. I think it's after that, especially as expectations are so elevated now and there's animal spirits in the market that are driving markets higher, that's the challenge into 2024.
Emily, thank you for the update. Emily Rowland of JH Investments. We are about 14 minutes into the session. We're positive by 0.2% on the S&P. Coming up, House Republicans preparing to choose a new speaker.
This is about a moment in time. This is about what America's going to do. I'll allow the conference to make whatever decision. Whether I'm speaker or not, I'm a member of this body. I know what history has had, and I can lead in any position it is.
The latest from Capitol Hill, up next.
To the world of business. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg. Context changes everything.
A lot of the focus on the breakthroughs were because a lot of these research labs, the OpenAIs, Anthropics of the world, DeepMinds, had this focus on AGI, artificial general intelligence. Can you build an AI that can do anything?
Yes.
And it turns out maybe you can. So
making a machine that's in our own image, in a sense, that's what AGI sounds like.
More than that, it's a general intelligence. So it's the kid that made you look bad at school because he was good at everything. The top performer.
Right.
Like GPT-4 now can pass the bar exam, the medical licensing exam, the GRE. It's probably going to Stanford, next fall. But then our take was, that's great. You can have these amazing giant general models. What will be better is to mimic humanity, where our companies are not one generalist doing everything. What if we made it so you could bring your own data to the models and have lots of specialists working together and have those models working for you that you own?
Right.
These models like really talented graduates that occasionally went a bit weird. It's called hallucinations or other things, but that's because we feed them bad data. So we were like, what if you had open data, open models, and allowed it to be customized and specialized? So again, like a talented graduate, and they can learn very quickly from a few examples. So they have this base of generalized knowledge. They've been through kindergarten, high school, and university, but they're not specialized yet. But you can train them yourself, or you can just show them some examples, and they learn very quickly.
this week on AI IRL.
I do think it has a tremendously positive effect on democratizing technology. I mean, just imagine what it must feel like if you are a country in Latin America, Sub-Saharan Africa, or in other parts of the world where you just don't have either the money, because you need a considerable amount of money, or the very significant GPU computing capacity, or the data to build any of all of these things.
Unfortunately, the House can do nothing without a speaker. I could be upset with 8, but I could be upset with every single Democrat as well. They both made the same decision, a political decision, instead of putting America first. This is about a moment in time. This is about what America's going to do. I'll allow the conference to make whatever decision. Whether I'm speaker or not, I'm a member of this body. I know what history has had, and I can lead in any position it is.
Former Speaker Kevin McCarthy willing to make a comeback, jabbing Democrats and Republicans alike for playing politics in the wake of deadly attacks on Israel. Without someone at the top job, congressional business grinds to a halt, even with bipartisan support for Israel in the chamber. Henry Trays of Veda Partners weighing in.
My hope is that we see the invasion of Israel really shake some things loose here in D.C. One of the things I'd like to see happen here is Israeli aid move the speaker's election along.
Candidates Steve Scalise, Jim Jordan vying for their colleagues' approval in a forum this afternoon before a secret ballot election on Wednesday. Your team coverage starts right now with Bloomberg's Anne-Marie and Katie Lyons in Washington, D.C. Katie, first to you. Just walk us through the timeline for this election.
5 p.m. tonight, John, is when the Republican conference will be meeting to hear from the two front-running candidates for the Speaker's gavel. That, of course, is Jim Jordan, the Republican from Ohio, chair of the Judiciary Committee, really a hardline conservative firebrand who appeals much more to that faction of the Republican Party and, of course, has gotten the endorsement of former President Donald Trump. Then there's Steve Scalise, a longtime member of House leadership. He has been the #2 Republican, appeals more to some of the moderates within the party. But at this point, the math doesn't work for either of them. It just does not seem that either of them can garner enough votes to get the majority they need in order to actually get the gavel, which is why we're hearing increasing muttering here in Washington about a potential McCarthy speakership 2.0. We, of course, just heard here McCarthy didn't necessarily rule it out when speaking at the Capitol yesterday, said he will do what the conference wishes, and there actually have been a number of Republican members who already have voiced support for a return of Kevin McCarthy to the speakership. The issue is the math doesn't really work easily for him either, remembering that 8 Republicans joined with every single Democrat to oust him just last week, so he would have to figure out a way to win some of the votes back. At this point, it's a very fractious-looking caucus, but they are going to try to coalesce around one candidate behind closed doors to avoid the embarrassment of bringing this vote to the floor and having to go another, say, 15 rounds like it took to get McCarthy the Speaker's gavel back in January. So this could be a protracted process as they try to get one individual a majority that they need. And of course, that voting, John, will begin tomorrow.
Anne-Marie, one subject, aid for Israel. Does this complicate things at all?
Well, it absolutely does, Jonathan. House Representatives cannot move forward with any sort of bill or legislation regarding anything, including aid for Israel, until they have a Speaker of the House. So they're at an impasse right now. But we do know in terms of aid for Israel, though, Jonathan, is that a group of lawmakers over the weekend had discussions with the White House. The White House will say it's too premature right now, but a discussion about linking Ukrainian aid with Israel aid. They view this as a way to potentially get some of these Republicans that do not want to move forward with Ukrainian aid to capitalize on the fact that they do want to move forward with aid for Israel. But one representative, Tom Cole, said this isn't fair. Israel should be addressed separately when it comes to Ukraine. But, Jonathan, these are the type of questions we will see only after there's a Speaker of the House.
Anne-Marie, there was a feeling after the weekend that maybe this would provide some urgency to Washington. Terry Haynes, earlier on this program, he said Speaker selection odds aren't higher. He said shutdown odds aren't lower. What's the consensus view in Washington at the moment, Anne-Marie?
I would agree with the probability of that and the math around it. As Kaylee pointed out, it's going to be very difficult for one individual to emerge with getting to that magic number of 217. But I would say there is a growing urgency that this Republican Party needs to get its act together, because they have now a long list of issues to address. And most notably, on top of that, given all their comments over the weekend, that's going to be standing strong and supplying support to Israel.
MH, thank you. Alongside Kelly Lyons,
Balance of Power a little bit later on, together with Joe Matthew at 5 p.m. Eastern Time on Bloomberg Television. About 22 minutes into the session, equities advance 0.25% on the S&P, up 0.3 on the Nasdaq. Let's get you some sector price action. Here's Abby.
The sector action this morning, John, is a little peculiar in the fact that the sectors on bottom, those that are underperforming, those are the dividend-sensitive sectors, the rate-sensitive sectors. So with yields down so much, you would think that healthcare and real estate would be rallying in a big way, tech as well. That said, we're looking at pretty small declines, so I wouldn't be surprised if those sectors join the other sectors. Consumer discretionary, the best sector on the day, up 1%, having to do with PepsiCo in part. Consumer staples, also a great sector, up 0.9%, and there are strong dividends there. So there we are seeing some of the more normal action relative to dividends and rates being down so much. As for energy, well, it is higher by just a little bit. This as oil is essentially lower by just a little bit, consolidating the gains. But take a look at the move up out of the June and May lows, up about 16%. Lots of volatility, though, John. Last week, down about 10%, now up about 5%. And it almost looks like there could be a V bottom there, suggesting that maybe the gains for the energy sector, they are going to continue.
Abby, thank you. Really busy week ahead. Tons of data, lots of Fed speak. The headline data point comes on Thursday. CPI just around the corner. Up next on the program, I'll get you that trading diary.
That's me, Max. What's up? How are you? I have been writing about Wall Street for almost 15 years. And what that means is I write about feuds and rage and rises and falls and comebacks. And every now and then, I also write about a couple of villains. Thank you so much. And now, I am about to do something new and very, very scary. We are making a show, and it's based on Bloomberg Businessweek magazine. So what is this show about? It's a show about money, power, culture, pop business. We're gonna ask complicated and profound people about their ideas, their careers, their lives, their risks, their failures, their imagination.
It's so incredibly liberating not to care what other people think.
I was giving my tools to other communities. I wanted to bring those tools home.
Tune in. Please, really actually tune in. I desperately need an audience.
This is Bloomberg.
25 minutes into the session, the rally goes into day 3 on the S&P, up 0.25%. As the price action, here's the trading diary coming up and what you need to be looking for. President Biden discussing Israel at 1 p.m. Eastern from the White House. Fed speak continues through the day. Waller, Kashgari and Daly all on deck. Wednesday, US PPI and Fed minutes, and House Republicans planning to hold elections for the next speaker. Thursday, US CPI and another round of jobless claims, and on Friday, to round out the week, big bank earnings kicking off with JP Morgan, Wells Fargo and Citigroup. From New York City, that does it for me. Thank you very much for choosing Bloomberg TV. This was the countdown to the open. This is Bloomberg.
would you worry most about your economy in Greece? And when you look at tourism, it's booming, but it also means some of the islands are overcrowded.
Exactly.
Is there something that you can do about that?
Thank you for asking this question, because I want to make sure that, in 5 years from now, we will not have sacrificed, the beauty of our sort of natural environment at the interest of a very rapid growth. So that's why I'm really focusing on sustainable growth. That's why I will always push for quality over quantity. Very strict in terms of standards. We are actually looking at our local and regional sort of planning legislation across the country to make sure that we know exactly what we can build and where we can build it. There are parts of Greece which have reached saturation point, and if we have to place restrictions, we will, in order to protect, especially islands, which are more sensitive.
Wall Street is waking up. Europe is already trading. And Manus Cranny and Danny Berger are making sure you have the news, data, and analysis you need to set your agenda. Micro, macro, and everything in between. Manus in New York and Danny in London follow the money around the globe. Take a daily deep dive into risk and help you make informed decisions for your trading day. Watch Bloomberg Brief, weekdays at 5 a.m. Eastern, only on Bloomberg. Context changes everything. This is Bloomberg Markets with Paul Sweeney and Matt Miller.
We got a lot of green on the screen here, but the volume is light. We constantly underestimate the strength of the U.S. consumer. This is a market that's much more optimistic or bullish than maybe the central bankers are.
Breaking market news and insight from Bloomberg experts.
There's still some concern out there in the market that there is room for things to deteriorate a little bit more than what they're indicating.
As small and medium-sized businesses struggle, they don't present as much competition.
The supply chain has still got dislocations globally and here in the U.S.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
Good Tuesday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. A little bit of green on the screen here. S&P 500 up 0.4% in this early trading. Coming up, we're going to get the latest from Israel. Ethan Bronner, he is the bureau chief, Bloomberg News. He is based in Tel Aviv, so we will get the on-the-ground reporting there and get the latest. Ira Jersey, chief U.S. interest rate strategist with his interest rate call. And then Ken Shea, senior analyst at Bloomberg Intelligence. We're going to break down Pepsi earnings. And you know what? I might even ask a cannabis question or two, because he's our weed guy in Bloomberg Intelligence.
Yeah, I think
like when he was training to be a Wall Street analyst, at no time did he ever think of weed.
I think he's due a few weed questions for sure.
Yep, so we'll break that down. But we're going to kick things off, as we like to do here, with Mr. John Tucker.
All right, thanks, guys. S&P 500 getting a little closer to 4,400. Some analysts seeing a rebound from oversold levels. 8 of the 11 major industry groups in the index were higher. Consumer staples among the leaders there. Thank you, Pepsi. A big part of risk sentiment being driven by a fall in Treasury yields, the idea that the Fed might be done. This week, investors waiting for PPI. That's tomorrow. CPI Thursday. As more of this economic data rolls in, Stu Kaiser at Citigroup says stocks can trend higher.
The data is very strong. Initially, you might get yields higher, and that can be a headwind for equities. But big picture, equities like a stronger economy, and you would expect them to kind of, reorient to that as well. And I think both payrolls and the ISM report last week, kind of played into that narrative.
Right now, the S&P 500, 16 points higher, up 0.4%, 43.52 on the index. The Dow's up 62 points. The Nasdaq 100 up 72 points. That is up 0.5% right now. 10-year yield 11 basis points lower. That's at 4.68. The 2 down 10 basis points. These are big moves. That's at 497. Amazon shares, they're up 9/10. One of the stocks helping drag the S&P 500 higher. Their fall sale for Prime subscribers that kicked off today. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Matt and Paul.
All right, John Tucker, thank you so much. We appreciate that. Matt Miller, Paul Sweeney, live here in our Bloomberg Interactive Broker Studio. We are streaming live as well on YouTube. So head over to youtube.com and search for Bloomberg Radio, and that's where you'll find us. Bailey Lipschultz joins us here in our studio here, giving us kind of what we're seeing. We got some green on the screen, Bailey, but what are you seeing in terms of some of the stocks?
Yeah, I know you guys will spend a bit more time on this later in the hour, but PepsiCo up 1.3%, positive results, raising their year view, calling out that they aren't seeing an impact from the appetite drugs, GLP-1 class.
I'm totally on board with that because that's a total scam.
I think.
Well,
No.
I
buy into it. I buy into it. Yeah, for
sure.
sure.
Like 3 people are taking the drugs. I mean, it's not going to impact Pepsi.
I know
or
3
booze.
people who are taking these drugs.
Do you?
Yeah.
Really?
I mean, maybe it disproportionately affects New Yorkers on the Upper East Side. But no, I think there's something. This is a fad that has not yet gained full momentum.
That's true. And right when they put it into a pill format, then it's going to be crazy.
At some point, everyone is going to be up. Because look around America, right?
Yes. Yeah.
I mean, have you ever been to another country?
Yeah.
Did you notice the difference when you came
noticed the
back?
difference.
Oh, yeah. We're 40 pounds heavier
here's
than
the
every
thing
other country in
here's
the
thing
world.
that gets me. We're getting way off Bailey's trail. Do they have to make the portions? I'm sounding like an old guy now. So huge. I mean, it's one thing at the Cracker Barrel. I'll go for the big.
Oh my goodness!
I
now
love
you
the
sound
big
like a
Cracker
really
Barrel.
old guy.
I love the Cracker
I
Barrel.
love Cracker Barrel.
Big portions.
Big
but
Cracker Barrel fan.
You know, you go to your Italian restaurant and like it's just huge. No wonder.
All right. Well, I mean, having lived overseas for 10 years, I was saying the opposite.
Right.
You know, when I was going to Admiral Codrington's in Soho in London, and you know, paying £25 for the calamari, and it's only 4 rings. I was like, "Are you serious? Please take me back to New York, where it's like £60."
Or back to Ohio.
Yeah. So anyway, I think. Today I'm gonna interview the chief financial officer of Pepsi, Hugh Johnson.
Okay.
At I believe 1:40 p.m. he's scheduled to come on Bloomberg Television, and I'll ask him about this because I feel like as these drugs, what do you call them, GLP-1s? GLP-1s, yeah. As these drugs pick up and more people start to use them, fewer people are going to drink sugared beverages. Fewer people are going to be pounding bags of Fritos.
Love Fritos.
I mean, I love them too, but they don't really help your waistline. So, you know, the big question is though, do you stay on it for life? Even if it is,
that's right.
Even if it's a pill form, either you're making a lifestyle adjustment once you lose those pounds, or you're just taking a pill. Here's the thing: you're still young, Bailey. Yeah. When you get older, you'll realize when you start taking a medicine, you're taking it to your grave. You know, all the medicines that I start taking now, I'm taking every day for the rest of my life.
Is that right?
And it's fine if one of those is a GLP-1 for me.
All right.
Works out.
Please give us something else.
Well, no, interestingly, on the PepsiCo call, they did talk about their focus on portion control packages, zero sugar beverages, and nutritious foods. Okay. So trying to lean in maybe a bit into... Nutritious foods can't come from a giant corporation. Nutritious foods are foods that are grown, you know, on a farm.
And speaking of that, Pepsi's got a market cap of $225 billion.
Wow. Big company. Yep. But that's leading to strength in Coke. Coke up 2.2%. We saw a bit of a bid in Keurig Dr. Pepper, ticker KDP. Coke's is KO, among the better performers this morning. Another stock to keep an eye on is Rivian, right now up just under 6%. UBS upgrading after the post-capital raise. I know we spoke about this last week on the company announcing plans to sell $1.5 billion in convertible debt. So now Wall Street sell side coming out, talking about the upside from the sell-off that we saw. Another stock gaining after an analyst upgrade. Electronic Arts raised at B of A, ticker EA. Optimistic trends coming from their new football game, EA Sports FC 24, so no longer FIFA, which I've long been a fan of playing FIFA. And then another stock, Unity Software, up 4.5%. This coming after their CEO is going to retire. This is a CEO who has bought quite a bit of strife and pushback from the game developing community. So when you look at Unity Software, ticker U, getting a bit of a bid, but really a lot of weakness since mid-July.
So cool that such a small company gets such a vaunted ticker. Like a single letter ticker, I feel like is the top of your game, right?
But this is only an $12 billion company.
Yeah, and Microsoft, New York Stock Exchange has reserved M for Microsoft forever, but they're never leaving NASDAQ.
Yeah, well, isn't Macy's is M too?
Yeah,
so you would
but,
need Macy's to.
Yeah, they'll have a conversation would be had if that were the case.
I mean, it doesn't. How much does it matter? Macy's is a $3 billion company.
Yeah.
You know, Microsoft is $2.444 trillion.
There you go. A little bit bigger.
Yeah. Macy's is a rounding error in Microsoft's M&A portfolio.
All right, Bailey, thanks so much for that. We appreciate it. Bailey Lipschultz, he covers all the equity markets for us. All right, we need to get the latest reporting from Israel, and obviously a fluid situation. Ethan Bronner joins us. He is the bureau chief in Israel for Bloomberg News. He's in Tel Aviv. Ethan, thanks so much for joining us here. Can you give us the latest reporting from the ground in Israel? What's developing right now?
Sure. We're still in basically a large waiting mode for Israel to begin the next part of its massive operation. It still has 300,000 guys in uniform. They've built a kind of temporary base with infrastructure near Gaza from which they're going to launch operations. It's almost certain it's a ground operation, but they haven't officially announced it. At the same time, the Americans have sent a bunch of help because the Israelis say that their material is fairly stretched, both in terms of their ability to monitor from the air what they're hitting, and even basic things like helmets for their soldiers. They say everyone has a helmet, but some of them are old and lousy, and there's some protective gear. By the way, some of the protest movement that was working very hard against the government has now turned itself into a fundraising operation to help troops and families in the South. And they've raised tens of millions of dollars in order to, excuse me, I'm sorry, in order to help those in the South and soldiers get protective gear. So there is a lot going on. At the same time, as southern Lebanon, people are afraid that something's going to happen there. They are driving away. That could be because Hezbollah does decide to come in. I live in Tel Aviv, and we have had missiles from Gaza hit Tel Aviv 3 times today. Hezbollah is also known to have long-range missiles that can reach here. So it's pretty intense.
So, Ethan, what does it look like to amass 300,000 soldiers outside of Gaza? I mean, that's a large number of people for an area of land that I'm going to say is roughly the size of, New York plus Westchester.
No, look, it's a good question. I mean, they're not all in one spot, but I mean, because there are people who have gone north, there are people who have gone to the West Bank, there are people, but 300,000 men are in uniform as reservists. So it's a lot of people. I agree with you. Now, they're obviously going to try to take them into Gaza soon because they feel that they need to strike while the iron is hot, while the world still has in its mind the images of the slaughter on Saturday of kids at a rave concert and families at a kibbutz and so on. So they clearly want to move quickly. One of the things that they've had more trouble with than they expected was the sort of securing of the South and the border fence. They have largely done that now, but that was so incredibly breached by Hamas fighters on Saturday. And it looks like there were probably close to 2,000 Hamas guys who came in on Saturday. They'd been saying 1,000, but today they said that they found 1,500 bodies of Hamas guys, and they've taken a bunch of people prisoner, so it's closer to 2 than to 1.
So, Ethan, what is the expectation for the next step for Israel? Are they going to send in tens of thousands or more troops into Gaza? And if so, what would be the objective?
So they're not, of course, telling us, and we can only speculate, but the objective seems to be put in a large way, the way they're saying it's to send a message and make clear to Hamas that it never again will carry out an attack like it did on Saturday. It will not have the capacity because we're going to take down every ability of theirs to do so. Now, is this really possible? And if you go door to door in this way, aren't you going to lose a lot of guys? It does seem like they're going to lose a lot of guys. It feels like they have decided that they're going in, that it's an almost existential a cause that they think that they have here to send this message not just to Hamas, but to the greater region, to Hezbollah and to Iran, that Israel is willing to lose people and to fight in an ugly way to survive. It's a very interesting shift that has occurred here, because just a week ago, if you like, it was all about making, the new Middle East with Saudi Arabia and railroads and optic fibers, and now it's we have to send a military message of muscle, and that's what we're focused on now. I think it's a hell of a gamble. We shall see where it goes.
Do you think we're going to have to see this fight broaden out? I mean, you mentioned Hezbollah is lobbing down missiles from Lebanon, and of course, all of this Hamas, Hezbollah, is funded, I think, to the tune of, I heard this morning, 93% by Iran.
From Iran.
So,
yeah, that's right.
I suppose you can have an academic debate about whether or not Iran knew every single detail of this plan and green stamped it at every step of the way, but it doesn't really matter if they're the ones who are funding everything. Don't you need to take the fight to them?
Well, I mean, I don't think that they want to take the fight to them, right? I mean, that would be really a kind of regional conflagration that is almost unimaginable, both in terms of supplies of oil and everything to the world, and the number of people involved. So, in fact, the U.S. has sent this big fleet right to the Eastern Med. It's on its way to send a message to Hezbollah to say don't send any missiles down, and to send a message to Iran to say, we're going to limit it to this. So and Iran, meanwhile, is sending messages saying, if you guys go and start killing people in Gaza, you should know that you're going to pay a price. We don't know what that means, but it may mean something. So I don't think the goal here is to bring it to a broader front, but it may happen anyway. I'm not sure how well thought out this all is. I do know there is an incredible sense of fury and humiliation in Israel, and I'm not sure that makes for the best laid plans.
It's definitely scary. I mean, I wonder what the mood is like on the ground, Ethan. I mean, you're, covering this, I imagine, in a professional sense, every waking moment of your life right now. But when you stop and reflect personally, or when you look around at the human costs, I mean, how terrifying is it?
It's terrifying. It's utterly terrifying, and I'm not an Israeli, and so I don't have that same sense that they have. But I have been amazed since Saturday morning at the complete shift, turning on a dime, of people I know here who all they cared about before was stopping the judicial overhaul and trying to drive Benjamin Netanyahu from office, and now all they want to do is go in and be hard asses in Gaza. They want to go in and they want to fight back. There's almost like a genetic impact here on Jewish DNA in Israel, that what they saw happen on Saturday reminded them of the Holocaust, reminded them of pogroms, reminded them of things that they decided to build this state to stop from happening. And that sense of deep fury and cause and purpose is everywhere right now. I know it won't last, but it is everywhere right now. And when you see also videos of the soldiers gathered near Gaza, they are pumped up and they are ready to go in.
So, Ethan, how are the folks? So you're in Tel Aviv now. Do you have family there as well?
I have cousins. I do have a wife. I don't have children here.
Yep,
my kids are in New York. Yeah,
it'll be interesting to see, because it's such a difficult situation there on the ground.
They're very difficult, and everybody's got kids, cousins, brothers, husbands, and who are now in uniform. So, and a lot of people know people who died on Saturday as well.
All right, Ethan, thank you so much. We really appreciate getting some time with you. Ethan Bronner, he is the bureau chief, Bloomberg News in Tel Aviv, Israeli bureau chief. Appreciate getting a few minutes of his time. We understand.
I'll tell you what, we don't, we haven't, and we don't, I guess, on radio or television go into the horrendous crimes that were committed over the weekend. I mean, Ethan mentioned the mass murders at the music festival. And when you read some of the reporting about that, it's just so bad that it's hard even to talk about publicly.
No, and that's why
I can't imagine how human beings would do that. No. You know, maybe a sick individual, but how would a group of humans do that to another group?
And that's why getting Ethan's on-the-ground reporting was fantastic to get a sense of kind of what he's seeing with the people on the street and how committed they are to, going in and kind of retaliating. So, again, probably some more difficult news before it gets better over there, but we will obviously have full reporting going forward. This is Bloomberg. Let's get some company news right now with Lisa Mateo.
Thanks, Paul. As the United Auto Workers enter week 4 of their strike against the big 3 car makers, the pressure rises for GM. Bloomberg's Gina Cervetti explains why.
Workers at General Motors' Canadian plants are going on strike at key factories in Ontario after contract negotiations with the union for about 4,300 employees failed to bring about an agreement. The union there had been trying to get GM to match a 3-year deal it signed with Ford that includes wage increases, cost of living allowances, and pension improvements.
Shares right now, they're up about 1%. Workers at another pharmacy chain have walked off the job. Bloomberg's Kimberly Adams has that story.
Walgreens pharmacists stage a walkout just weeks after similar action by CVS staffers in Kansas City. The pharmacists say the company places unreasonable demand on workers without providing the staffing or resources to do their jobs safely or ethically. That walkout on Monday left stores closed or short-staffed across the nation's second largest retail pharmacy chain. Organizers expect this walkout to last through Wednesday.
Checking with shares of Walgreens right now, they're up about 1%. Meanwhile, the Hollywood screenwriters' strike has come to an end. The Writers Guild of America says members overwhelmingly voted in favor of the new 3-year contract. It includes an increase in base pay and minimum staffing levels on shows, as well as assurances that AI won't take away their pay or writing credits. Writers will also get bonuses for TV shows that are successful on streaming services. The Screen Actors Guild, though, they are still negotiating. Those are the company stories we're following this hour. We'll have more Bloomberg Markets in just a bit. I'm Lisa Mateo, and this is Bloomberg.
Headlines and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
Yeah, and I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Green on the screen. Treasury yields, that's a big part of the market story today. The idea that the market's done a lot of the heavy lifting for the Fed. Yields taking a dive. There is some haven flight and also catch up after yesterday's holiday. Federal Reserve Governor Chris Waller also speaking this afternoon. Consumer staples right now, the best performing industry group in the S&P 500. That's where you find shares of PepsiCo. Adding to risk sentiment today, our story that China is going to stimulate their economy. S&P 500, 26 points higher, up 0.6%. 43.62 on the index. The Dow's up 166 points. NASDAQ 100 up 80 points. That's up 0.5%. 10-year yield down 12 basis points. 467. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Matt and Paul.
All right, John Tucker, thank you so much. We appreciate that. Bloomberg Markets today is brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with the solutions they need to grow a thriving business. Commonwealth, go where you grow. Visit commonwealth.com to learn more. Matt Miller, Paul Sweeney, live here in our Bloomberg Interactive Broker Studio, streaming live on that internet thing. You can go over to, I guess that's YouTube, the kids call it, youtube.com, and search Bloomberg Radio. All right, let's bring in Ira Jersey here. He's the chief U.S. interest rate strategist for Bloomberg Intelligence. Ira, we're going to get some inflation data over the next couple of days, and I think most people feel like it's going to show continued moderation in inflation, both at the producer level and at the consumer level. If I'm the Fed, is that enough to kind of say, all right, I can just sit on my hands for a while and see how things play out? Is that kind of how it should be?
Well, assuming we do continue to get moderation, I think that there's a risk that some of the moves that we saw last month in oil prices are going to maybe lift the headline numbers a little bit, particularly in the consumer price data. But it's really the key, I think, will be the core inflation data. So what is core CPI? Does that continue to moderate? And assuming it does, then it probably gives some cover for the Federal Reserve to not hike again in November. I still think that there's less than 50-50 chance that they actually do at this point. And I think things like global geopolitical tensions increasing certainly is something else that will weigh on whether or not they're going to hike interest rates again. I would argue that yes, this data that we're getting this week is critical, but there's a lot of other moving pieces, obviously, to the mathematics of another hike or not.
One of those moving pieces, I guess, is real rates. And in a sense, it reminds me of Mike McGlone always says higher prices are the best cure for higher prices.
Exactly.
I guess it's the opposite in the bond world, right? If these prices fall to a low enough point, everyone's going to come in and start buying them.
Yeah, so I think for rates, there is a level where bond yields are attractive, and certainly when you look at things like TIPS yields, 2.5%, a little bit less than 2.5% for 10-year TIPS yields, that I think is pretty attractive to some people. But then when you go back and you look at the historical context, where were those types of yields in the late 1990s when TIPS started to trade, and then before the global financial crisis, you still had TIPS yields that were 3% or above. So I think from when people look at these charts, it's only relative to the last 10 or 15 years that real yields are particularly high. So I do think that though that they're not unattractive at these levels would be what I would say, and now they're a much more interesting inflation hedge than they were when TIPS yields were negative, right? When TIPS yields were negative 100 basis points, that meant in order to just to break even, you'd have to have inflation of at least 100 basis points. But for a bond investor, you want to have a return above inflation, and we're finally at a level where I think people could be comfortable that we're reasonably enough above inflation in terms of the yield that you get, that you can continue to see some nipping at the edges there, especially if the Federal Reserve is going to be done hiking rates.
Well, as you well know, Ira, it's world known here that I've taken recession off the table, and I think the yield curve is kind of supporting me here. I'm looking at the inversion of the yield curve. It's only negative 30 basis points today, and back in July it was north of 100. So what's that tell you?
Yeah, so it's not a surprise to me that we've become less inverted. It's the way that we've become less inverted that was a little bit surprising to me. So our view had been that as the Federal Reserve winds down its hiking cycle, that we'd see a 2-year yield start to come down versus 10-year yields basically staying the same, and we've gotten just the opposite of that. And I think that that's a reflection, and a major reflection, not so much of that the Fed's going to be done, because the Fed, even if it hikes again, is probably done after one more hike. It's more how long do they keep rates at this level. And if you're right, Paul, and we don't get a recession, which is more or less the view that we take here at Bloomberg Intelligence Rates strategy, is the yields can wind up basically pancaking. So we're calling it a pancake of a yield curve, where you can have 2-year yields, 5-year yields, 10-year yields basically at the same-ish level, and wind up maintaining that for the next 6 to 9 months. And then you probably start to see, calls for a cut, people worry about growth in 2025 and the like. Because the longer the Fed holds rates high, the deeper a recession that the market's going to price. So I do think that eventually it's going to be time to get into what we call bull steepening, which is buy 2-year notes, keep 10-year notes kind of market weight or underweight, and then you wind up seeing a pretty significant steepening of the yield curve.
What would do you think cause the Fed to cut rates? Are we talking about unemployment breaching a certain level, 4.5%, for example? Is it about the speed rather than the level? If it jumps up all of a sudden to over 4, or is it about GDP slowdown? What do you think?
Yeah, so if there's some kind of exogenous shock that causes mass layoffs, then certainly the Federal Reserve would take notice. But remember, I do think that in this environment, and given how difficult it has been for the Federal Reserve to kind of get inflation expectations and maintain inflation expectations to be relatively low, I think that you have to have not only an increase in the unemployment rate, but you also have to have a continued decline of inflation. So in a situation where you have the PCE deflator running at 3% or 3.2%, and the unemployment rate rises a little bit over a few months, I think the Fed's still on hold, right? They're still going to be worried about that inflation component of a lot of the data, right? And their mandate, they do have this dual mandate, which sometimes makes it a little tricky for them, right? If you're the European Central Bank and you only care about inflation, then it's a little bit easier to kind of manage your rate and rate expectations. So I do think it has to be the unemployment rate rising very quickly, but only in an environment where inflation is continuing to moderate.
Ira, when you talk to your institutional investor clients, the folks you've been talking to for years, what's the trade they're talking about most these days?
Yeah, so it was a couple of weeks ago, the idea of being long duration, because typically the longer end of the yield curve does pretty well when the Fed stops its hiking cycles, and I think a lot of people were the wrong way. So people are a little bit nervous and don't want to take big positions right now because there's a lot of uncertainty in the direction, not so much of monetary policy, but more in terms of positioning in the market, what the supply story is going to be, because deficits continue to be run pretty high. So people are worried that there's been a supply shock a little bit, although that's our data and our work suggests that that's not as much the case. But nonetheless, I think there's a lot of people out there who got burned and would just rather stay market weight or just sit on their hands and not do a lot yet until there's a more significant or it becomes much clearer what the direction of the economy and monetary policy is going to be.
Hey, Ira, how's liquidity in the marketplace? If I call up my the Govy desk at JP Morgan or Goldman Sachs, can they make me a nice deep market?
They haven't been able to recently. So the liquidity has been pretty poor really in the last 18 months. And I think a big part of that is just because the market's gotten so big and the pipes that all of this money and all these bonds have to flow through has basically remained the same size. So you have a lot more flow and a lot more supply out there that needs to find a home. And on the other side, you don't have dealers that are willing to take on the size and warehouse risk the way that they were prior to the global financial crisis, prior to the new Basel regulations that kind of constrain the way that dealers can operate. So part of the reason why we've seen a lot of the volatility in the market has been a little bit of liquidity. That being said, like top line, like if you want to do social, what I call social size, you can probably get it done. But if you want to do a bigger trade, it's going to be more difficult
difficult to get off. So people are going to leg into these trades, which just means that you might have longer periods of time that you have to shift your risk around. So another reason why you might just want to sit on your hands for a little while.
What about the auctions, and especially any longer dated treasury auctions? How much do primary dealers take down now, and who's the rest?
So dealers actually have been taking down historically tiny amounts. So in a lot of treasury auctions, dealers used to take a bulk of auctions, 40%, 30%. Now in many auctions, they take less than 10. And it's really the demand from domestic asset managers and foreigners that wind up being the mix of buyers of these auctions. There is higher savings now than there was, say, 15 years ago in the United States when we had a significant amount of dis-savings. So some of the money ends up going back into various we call it savings vehicles, whether those are insurance funds or even baby boomers, shifting money out of equities and into fixed income mutual funds or ETFs. All of those flows combined meant that asset managers have been, by far the largest buyer at auction.
All right, Ira, thanks so much for joining us. As always, Ira Jersey, Chief U.S. Interest Rate Strategist for Bloomberg Intelligence, joining us from Princeton. Right now, let's head down to Washington, D.C., because Amy Mars has got world and national news for us.
All right, thank you, Paul. The conflict between Israel and militant group Hamas is in its fourth day. At least 1,600 deaths so far. Israel struck the Gaza Strip overnight. It's building a base to accommodate thousands of soldiers to get ready for the next phase of its response. Bloomberg's Israel Bureau Chief Ethan Bronner has more on what Netanyahu told the country in a televised evening address.
This is not going to be a walk in the park. We are going to take this force down. We are going to do it in a way that for decades, he said, they will remember it.
Bloomberg's Ethan Bronner talking with Bloomberg Business Week from Tel Aviv. And as many as 100 hostages remain unaccounted for. Americans are believed to be among them. Bloomberg's Nancy Lyons with the latest.
Hamas is threatening to kill hostages if Israel conducts surprise attacks on residents in Gaza. Mick Mulroy is a former Deputy Assistant Secretary of Defense for the Middle East and says it will not be easy to rescue the hostages.
There are reports that they are in tunnels, and the tunnels are wired. So a traditional hostage rescue would be exceptionally difficult.
Mulroy tells Bloomberg Businessweek Hamas will use the hostages as human shields and as bargaining chips, going against all international laws. In Washington, Nancy Lyons, Bloomberg Radio.
Donald Trump's civil fraud trial resumes today with Trump's longtime financier chief, Alan Weisselberg, on the witness stand. He's also a defendant in that lawsuit and is expected to testify about his role in preparing Trump's annual financial statements, including conversations they may have had while finalizing those documents, which were used to secure loans. New York Attorney General Letitia James alleges that Weisselberg engineered Trump's financial statements to show increases in his net worth that did not exist. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Amy Morris. This is Bloomberg.
headlines and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. This on a day when it appears to be risk on. Stocks rising as Treasury yields fall. Some of the individual shares on the move today. PepsiCo gaining on a bullish forecast. And then you have Amazon.com higher. The fall sale for Prime subscribers that kicked off today. Fed officials say the market has done a lot of the heavy lifting for it. Ian Steely at JP Morgan Chase says investors are betting Fed rate hikes are nearing an end.
The Fed officials who were thinking the market was getting ahead of itself, that they were going to effectively hike rates and then almost immediately start cutting, that's been pushed out. And it does feel that, listening to some of the speak yesterday, there's a lot more comfortable that the market is doing the Fed's job for them, and maybe they won't have to go quite as far.
And add this to the mix, another Fed voice, Federal Reserve Bank of Atlanta President Raphael Bostic reiterating he doesn't think policymakers need to raise interest rates any further, and that their policy is restrictive enough to bring inflation back to the Fed's goal of 2%. Right now, the S&P 500 is 31 points higher. That's up 0.7%, 43.66 on the index. The Dow is up 161 points. NASDAQ 100, 125 points higher. That is up 0.8%. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Matt and Paul.
All right, John Tucker, thank you so much. We appreciate it. Matt Miller, Paul Sweeney, live here in our Bloomberg Interactive Brokers studio. Looking at Pepsi, they reported some results a little bit better than expected. Let's break it down. We can do that with Ken Shea. He's the senior analyst, covers beverages, tobaccos, and cannabis with Bloomberg Intelligence. So we're going to break that down. Ken, thanks so much for joining us here. Talk to us about Pepsi. How did our friends there in Purchase, New York do?
Yeah, hi, Paul. They did really well. As is PepsiCo style, it was a report that exceeded expectations, as they normally do. Sales were up a nice, strong, high single-digit rate. EPS came in at about 14%. Both, again, beat expectations. And importantly, the underlying trends were good. The gains were broad-based. International was really strong, which offset a lot of the currency headwinds still. And the company's outlook was also favorable. They lifted their outlook for core EPS, adjusted for currency, up a little bit. And they even went out, unusual for them, and looked out to 24. And didn't give a lot of detail, but they said that their long-term algorithm, which is mid-single-digit revenue and high single-digit EPS growth, looked like it was going to hit the high end of those ranges. So overall, you had to have a hard time finding a lot of fault with these numbers today.
What is the currency headwind? Is it the fact that the dollar is so strong that the revenues they're bringing in from elsewhere are lower?
Yeah, that's right. The recent strength of the dollar, versus the pound in particular, has been weighing a little bit on their reported numbers. That's been going on for quite some time now. It may extend a little bit further. But again, I think the underlying fundamentals of the business are very favorable. I think that's what investors are looking at. They're also looking at this whole notion of the obesity drugs. I don't mean to jump to probably a question that was coming up, but a lot of investors were nervous about the talk about obesity drugs, how's it going to weigh on the snack and confection of food companies. They seem to allay those fears and said, look, there's no real evidence of that happening now. And, I'm looking at, the past per capita consumption of salty snacks, and it's been rising at a, low single-digit steady rate over the last few years, higher than sweet snacks. So I don't see it really being an issue in the near term. I think that's helping the share sentiment today. Well, they expect core earnings per share growth of 13% at constant currencies.
Mm-hmm. That's strong. Organic revenue growth forecast at 10%. So that's big. And I wonder if we talk obviously a lot on this show about the GLP-1 drugs, the obesity drugs, and their effect on consumer discretionary stocks and, after news like what we saw at Walmart last week, where they said people who get these drugs have a smaller calorie basket. That makes sense. On the other hand, we also talk about weed a lot, Ken. And I'm here to tell you that
Wait, isn't that good for the munchies?
The craving for salty snacks and sugary drinks probably, I'm guessing, rises if you're using marijuana products. So I guess these things are kind of running at cross currents, aren't they?
You know, that's I agree, Matt, and that's a potential trend line that they don't point out, but it's probably there. You know, other long-term secular gains to their favor, you know, are when you think about a company as global as they are, you know, it's the urbanization of, you know, consumers. You know, they have access to more access to convenience stores where a lot of these things are sold. Rising middle class and wealth, they can buy these value-added products. And then consumers today, at least I do anyway, I graze throughout the day. Every time I go, you know, by the kitchen, I'll grab something, you know, a snack or something. And that's how people eat today. The traditional 3 meals are kind of going out with the dinosaur. And so all those play really well in a PepsiCo's business model.
All right, so PepsiCo, the dividend, they've got a little more than a 3% dividend. They've got a lot of cash on the balance sheet. They throw off a lot of free cash flow. What's the dividend story? What's the cash return story for Pepsi?
Yeah, so PepsiCo is very balanced when it comes to their capital allocation. Their long-term capital allocation prioritizes dividends. You know, on a selective basis, they'll buy some shares back, and their algorithm is, you know, with sales growing a mid-single digit, and EPS growing high single digit, low double digit, they believe that even you know, at a current PE, they can kind of churn out kind of a low double digit total return for investors, and that's kind of what they've been doing. And you know, if the algorithm's working, why break it, right? So this is what they've been saying for a long time. You know, and the company pointed out today their stability. You know, you look back 5-10 years. There's a lot of been